Good afternoon, everyone. Welcome to the half-day seminar on TDS update, basically for residents and non-resident. This is Pramod R. Hegde, Secretary of Bangalore branch of SNS. I would like to welcome you all to today's event, and a special welcome to our chief guest, CA D R Venaktesh and CA Sandeep. I would also like to place on record of the presence of a certain of our committee members. CA Divya, Vice Chairman, CA Kavita P, who is the Chairperson of CISACA, also Manjunath M. Malu, who is the Treasurer of our branch. I would request Chairman to escort the speakers of the day to the dais. I would request the Chairman to hand over a bouquet to the speakers of the day. Also, I would like to place a warm welcome to the members who are present virtually as well. I would like to call upon Chairman to give opening remarks. Chairman, over to you.
Respected dear Venaktesh sir, professional colleague Sandeep, Secretary Pramod, Managing Committee members, those who joined virtually and physically, and my dear friends. Happy evening to you all. I welcome you all for the half a day session on update on TDS. To handle this session, we have an eminent speaker, none other than D. R. Venaktesh sir. He is very popular in taking, especially on TDS subject, all over India I can say, especially South India also very popular. He is an expert on that subject. TDS also, it's becoming vast. Earlier, started with very few sections. Nowadays, they are increasing the sections, even residents as well as non-resident, to track the transaction. They are making it very bulky and very complicated to consider to earlier years. So, to handle that session is only one person, we can say it's D. R. Venaktesh sir. When I invited him for this program, he immediately agreed to come and deliver his speech to update our knowledge. I thank on behalf of Bangalore branch of ICSR for your commitment for our branch. Thank you. And I won't talk much about the TDS, but I want to give us some information about our upcoming programs. The major upcoming program on 19, it's a bank branch audit, because bank branch audits will be going to start from 1st April. So as an annual event, Bangalore branch is conducting a bank branch audit program. Every year, same way, we are conducting bank branch audit program on 19 in Hotel Chancery Pavilion. All 4 faculties from outside Karnataka, from Maharashtra and Hyderabad, Chennai, and very interesting topics. Hope all the members, those who join, they will enjoy those topics, and request members, those who not join, please join, register for that program. And I will through this forum to the members that all 2 years we had virtual programs. Many of the programs we conducted virtual programs. Even now we are doing programs on virtual as well as physical. It doesn't mean that you don't have to come for physical. Okay, it's only for accommodate in your busy schedule you conducting virtual. Otherwise, I request members to present for physical programs, encourage the MC to do more and more program so that that fellowship and we can meet members. Last 2 years we have not done any physical program. We started slowly. I request your support in that. With this, I welcome you all once again. Thank you. Over to MC.
Thank you, Chairman. Firstly, I would like to introduce CA D R Venaktesh sir. After qualification, he joined MSSV & Co. Chartered Accountant, which is a leading chartered accountant firm which was established in 1981. His specialization includes taxation of cooperative banks, taxation of non-profit institution, TDS, tax audit, survey and such. He was also previously president of Karnataka State Chartered Accountants Association in 1998 and 99. He was the vice chairman of All India Federation of Tax Practitioners. He is also a research person for programs organized by the branches of the Institute of Chartered Accountants of India and other associations as well. He is the resource person for the management development program conducted by the Institute of Chartered Accountants of India. He has given more than 200 lectures on TDS, taxation of cooperative banks, cooperative society, surveys, search and seizure in different parts of the country. Recently, Rotary International recognized him with a Professional Excellence Award. So I would like to welcome with a round of applause Dr. C. D. R. Venaktesh sir. Yes sir, I would like to hand it over to you.
Good evening, friends. I have to thank the office bearers of Bangalore branch of SARC, especially Chairman newly occupied position of the Chairman of the Bangalore branch of SARC, a big branch in A level. I want to congratulate and also I wish him all the best for his future programs. Friends, when we called and told, sir, you have to address the members on the tax deduction at source, I really agreed it is a physical program. But I come to know now it is a virtual program as well as physical program. I want to tell you, my friends who are in virtually, I am not in a position to see you, but I am in a position to tell you what are the points I am going to talk to you on the issues connected to tax deduction source. Friends, topic selected for the today's discussion is, sir, every year you require an update on tax matters. Tax matters you require update every year. Especially after the budget is presented, we'll have a lot of issues discussed, thoroughly discussion on the issues involved in each sections and discussed. Similarly, in TDS also we have a lot of issues to be discussed every year. Since last time I ran a virtual program for all India level as well as southern region, also Bangalore branch. But this year, I have taken some update which is related to I want to discuss today with all of you regarding what are the issues or what are the new provisions introduced in the Finance Bill 2022. There are only 4 amendments and 2 new sections. And Finance Act 2021, 2019, earlier something I want to take up. And I am going to discuss some circulars and guidelines which are related to these provisions. And finally, I want to conclude my presentation with a conclusion in the TDS provisions. This is a finance bill, as today is a bill. There are 4 clauses related to TDS. The 2 are amendments, that is under 194IA, 194AB, and new sections introduced, which are applicable from the 1st April 2022 and 1st July 2022, is section 194R and 194S. This I am going to discuss in detail. In Finance Act 2021, all of you know, these are the 194A and 194Q, 206AB and 206 CCA. These are the which I am going to discuss in detail later. In Finance Act 2020, there are also 6 provisions: 194A amendment, 194J amendment, 194N was a restated new provisions. Is a very interesting withdrawal TDS. Then 194A new section, the e-commerce operators. 197B related to the COVID period concessional rate of TDS. And 206 which is a new provision TCS introduced from 1st October 2020. In 2019, there were a lot of things known as 194 ID, which I am going to discuss. There is an amendment, 194 IC, 194N and 194N. N was first introduced in Finance Act 2019, but restated in Finance Act 2020. This is what we wanted to discuss. Then this is what today's point I want to discuss. Time allotted is 3 hours. In first 1.5 hours, I will give as much as possible. Then after the tea break, after 1.5 hours, I request my friend Mr. Sandeep, who is my partner, he is going to take up the issues related to non-residents. I will present only domestic transactions. He is going to discuss with you on the non-resident transactions. It means domestic related to domestic means a transaction where deductor is deducting TDS, recipient is a resident. Understand? The deductor is a resident. We will discuss. If the recipient is a non-resident, Sandeep is going to discuss the issues related to the non-resident. This is what how we allocate it. I will give the presentation. I have a gap of 10-15 minutes for the break. Then we will take up. Then after that, I will take up again what are the pending cases. Now the Finance Bill 2022, which was presented on Finance Bill by Honorable Finance Minister, presented in the Parliament. There are 4 sections. 4 sections which I have told you, which are discussed in the which is discussed in the Finance Bill amendment. It is amendment in 194IA. This 194IA was introduced in the Finance Act 2013. It says when your consideration paid for a purchase of an immovable property other than agricultural land, consideration is more than 50 lakhs. The buyer has to deduct TDS under 194IA rate of 1%. This is a old provision. The consideration mentioned in the sale deed is more than 50 lakhs other than agricultural land. Then you have to deduct, buyer has to deduct TDS under 194IA rate of 1%. That is the provision existing in the Income Tax Act. Now this current year, in Finance Act 2022, they added some extra wording saying that consideration mentioned in the sale deed is 50 lakhs or stamp duty value. As you know, this is very important now. Under stamp duty value, suppose you take for example, you are registering a property for 45 lakhs, as per the consideration mentioned in the 45 lakhs. You agreed. And you are decided not to deduct tax because it is less than 50 lakhs. But stamp duty value for which you are paying stamp duty is, suppose take for example, is 55 lakhs. If you take stamp duty value, 194I is attracted on 1st April 2022. Earlier was not attracted because consideration mentioned in the sale deed was only less than 50 lakh. No 194IA. Now because an amendment which says that stamp duty value or consideration whichever is higher you have to consider. Once the stamp duty value is more than 50 lakh or a consideration mentioned in the deed is more than 50 lakh, the TDS is attracted. You have to deduct on the stamp duty value 1%. What is stamp duty value? As per the consideration, whichever is higher, you have to deduct 1% TDS. This is the new provision. Only you have to go by the sale deed, not the stamp duty value. Now the amended, which is effective from 1st April 2022, you have to see both. As a consultant, when you are advising, you should be very careful. From usually chart accountant, our habit is somebody calls us, sir, I am purchasing a property. Yes, fine. What is the value? Okay, 60 lakh, deduct 1%. Without asking any further question. Therefore, my request is please ask one more question. What is the stamp duty value for the registration? Whether it's 60 lakhs? Fine, no problem. If it is 60 plus, suppose more than that, then you have to deduct TDS under 194A, stamp duty value. This is what in the Finance Act 2002. This is very important. Therefore, be careful. Now when you are advising, you ask both things. What is stamp duty value? What is the consideration? So the higher should be adopted this TDS under 194A. Next is 194A, TDS on rent, where this is a very small amendment, where in case of 206A, the section 206A also added. Here what happened is in case of rent, you are deducting usually 10%. Under 206AB, there is a new provision which is introduced in the last budget. You have to deduct TDS at the double the pace rate because of the 206A requirement, which I am going to discuss. Now they added, earlier was said 206A rate, 206AB rate, whichever is higher. Now they said very clearly 206A rate is applicable. This is a new provision. Friends, is introduced from 1st April 2022. Says TDS on benefit of purchase in respect of business or profession. Friends, so far, we know whenever you make a payment, you have to deduct TDS. That is the normal thing. Now you say when you provide a requisite, any benefit, then you have to deduct taxes. So under 194R. Friends, responsibility, our means a businessman's responsibility increasing every year. Friends, you see 1985 Income Tax Act, see that how many provisions in TDS, what is the area covered. From 85 to 2022, see how many changes are there, definition of payment is increased, and every year there is an addition to the TDS provisions. Now they are increasing by day. Now what it says is, any person, here is any person paying resident, you have to deduct 10% of the value or aggregate value of such each benefit or a perquisite. It means that you are not making any payment, but you are providing a perquisite or a benefit to any person, then you have to deduct TDS on that benefit. TDS on that perquisite, you have to deduct 10%. It's your responsibility as a chart accountant when you are advising your client, you should be careful that after make payment you are providing any perquisite or a benefit to any person, then you have to deduct TDS under this new provision 194R 10%. This is what I want to tell you today. What are the responsibilities adding to the chart accountant? Now this says no TDS, the benefit perquisite is up to 20,000 and payer is an individual or HF whose is not applicable, no TDS under 194, whose individual or HF whose gross asset does not exceed 1 crore. If it is less than 1 crore, this provision is not applicable. And payment is more less than 20,000. Value is less than 20,000. This provision is not applicable. This is what to keep it in. In case of profession, 50 lakhs. That is the limit. Friends, today, TDS 10% is not the issue. How you value this perquisite or how you value this benefit is very important. Anyhow, it requires a lot of suggestion. I am not going to touch that. But as a chart accountant, as a tax consultant, it should be very clear. 194 R is a new provision. He says that if you provide a benefit or any to any person, then you have to deduct TDS under 194 R. That you have to keep it in mind. This is what is very important. Suppose a chart accountant, I am a practicing chart accountant, my turnover is more than 50 lakhs. I am providing you some benefit to other than your employees, something I provide. Take for example, simple example for only for discussion. One person is there, he is not connected to my this one. I am paying, suppose marriage or anything, benefit 1 lakh rupees. Some marriage. There is son marriage or daughter marriage. In my opinion, it is read by 194R. You are paying to any person, if the employee means you deduct under 192. But it is not coming under 192. It is a benefit you are passing on to some person. I don't know what benefit you are passing on, but I am giving anything that then is liable for tax. So very difficult. Understand? This is a practical difficulty. We have to do it. Only sir, TDS arises only when you make a payment, pay it whichever is earlier. Once you are making a payment of 1 lakh rupees or more than the threshold limit prescribed under this section, you have to deduct TDS and 10%. You have to give 1 lakh plus 10% of that as a TDS. This is the requirement of the law now. Yeah, in a pharma company, it is applicable to so many people, shampoos, they'll send you to foreign travel. All these things are benefits. Earlier, see, take for example, what Madam told is a pharma company says like, okay, we will send sponsor all the doctors that are connected in our line to provide trip, Singapore trip and other things. Maybe each such cost of reimbursing maybe 1 lakh, 1.5 lakh, 2 lakh. This is a purpose hit by this 194R. This is what hit by 194R. This is very clear. Earlier it was very clear what is recorded in the books and everything. We never had to go to the details. Benefit under. Now it says you have to deduct TDS under this. This is what the very important thing is introduced in the. Be careful. Per annum, sir. Not per. Otherwise, you will split each transaction 9500, each transaction 90%. Per annum. Per annum, sir. In case benefit or progressive provided in a kind, or partly in cash and partly in kind, but your duty is ensure that whatever TDS applicable on kind plus cash together, you have to remit to the government. It means you are providing only in kind, sponsored to the foreign trade, no money is involved, but whatever the TDS applicable under this section, you have to remit to the government. They want their share of 10%. That how disalliance, how that going to be a problem. Especially pharma company or any other company which is sponsoring this type of thing is hit by this. The department will aware very clearly because section 194 reflects all these transactions. Then there will be issues. Not all these things will start. Friends, if we see that first TDS prices are introduced to say that okay, you earn some income which is liable to tax. Deduct TDS under Chapter 17 DTAA Act. That was the beyond the this is the intention behind that. Then slowly what happened? Department is difficult to find out the transaction where this one to attract all this one they say introduce TDS provision. Take for example 194N, which I am going to discuss that. 194N, in which they say that to be a withdrawal is more than threshold limit of 20 lakhs or 1 crore. Deduct TDS under 2%. It means a cash withdrawal, it is made towards for expenses, genuine expenses. We have to deduct TDS. It is not income at all and is my terms of the person who is withdrawing cash in the bank. But they say deduct. See, purpose for which this TDS provision are introduced to collect some portion of it because you are paying advance tax. Income and some of the TDS transaction which attract TDS under Chapter 17B, deduct 10%, what are the rates prescribed under the Chapter 17B. Now it has come down to now, the department has a control on all this transaction, they introduce in the section. In that 194 also in section, which they say they want to see how much you have, then the benefit is going to when, where you have to be taken, allowability of the expenditure. TDS deducted is over, but allowability is the next question. Not permitted to give like that. See, these are all the issues. Be careful. Our role as a tax consultant, tax auditor, you should see that whether he has complied with all these laws. Section 28 is also amended. Yeah, that also is there. I am taking only TDS. Because all the sections I cannot cover within the term allotted. Therefore, the TDS I am telling. What I am telling is the intention of introducing a TDS provisions, Chapter 17B was different. Slowly is now controlling. The department has a transaction, all the entries you are passed in the books, they want to collect from like the 194N, 194R, like this, so many sections are there to see that your transactions, they are aware. They know. And so now, statement of financial information, 50 transactions, when more than 10 items are covered, we draw more than 10 lakhs cash, automatically refrigerate. So many things they are attracting now. Okay. So, as an advisor, you are an advisor, you should be careful of all these transactions, or you should be very clear about these provisions and tell your client, say, this is the provision, be careful. Otherwise, they think, I want to share one of the information. Somebody told the bank manager, you draw 10 lakh, more than 10 lakhs, you are liable for. This information goes to income tax office, they will ask questions. What it should be less than. Then what he did, he draw every time 9.5 lakhs, 9.25. In a year, he has done more than 10, 15 times or less than 10 lakhs. Then what are we under that particular thing? Where he is not in a position to explain why he is drawn and what is the purpose, then leads to so many other problems. Friends, today, all the financial transaction, what you are doing, you should be careful about the income tax, as well as the Money Laundering Act, Benami Transaction Act. When you are advising youngsters or here, I want to tell you, when you are advising any client, keep all this in mind. Benami Transaction Act, Money Laundering Act, so Black Money Act, you should be aware. If you continue in a position to advise all these things, then only you can perfect. And you can tell what is there in the income tax. Friends, this is our job is going to be very challenging. Every year, our role, our responsibility, our challenge is increasing. Therefore, you should very read, update, and knowledge of all these transactions. All these provisions should be very clear. What are the issues involved in this section? Be prepared for the what is the suitable replace, suitable answer to all these questions. With this, anyhow, I will start. Yes, sir. Which is it? Vehicle is reimbursement, no. Sir, reimbursement you are spent earlier, that you are asking reimbursement. That is not covered. It is not a benefit at all. Suppose I go for a chart account, as a chart accountant, I will go for company audit. Suppose the income, my expenditure, staying in a hotel, all those things, my stay, flight charge, suppose it comes to 1 lakh. Ask the reimbursement of the company. It is already done, sir. It is not a benefit. Benefit I got. I think I am asking a reimbursement. It is not covered by that. It is any reimbursement as per the contractual obligation. If we are taking reimbursement, it is not a benefit. Benefit means you are giving something without expectation, and you are not taking any benefit, any mean. You are giving simply like that. That will be attached to coming under 194. It is very difficult provisions. Very practically to the conclusion, what type of benefit to cover, what type of purpose is covered. They cover simply purpose benefit. It is. They are not different what are the things covered. Only they said up to 20,000 per year is exempted. If it is more than 20,000, there may be valuation difference. New value may be 90,500. Department will say they know 25,000. Then you are not deducted TDS. You are disallowed 20% of the expenditure, 30%. These are all the issues start. Therefore, be very cautious while advising client on this matter. So another provision introduced, this 194 years, TDS on the payment to transfer of a virtual digital asset. They defined what is a virtual digital asset. They want to say when they are transferring, you have to deduct 1% that sum as a TDS. So these are also transactions they want to capture in their control, so that they know what are the virtual asset transfer during the year, and how to tax or what are the treatment you want to. That will be reflected in this. Therefore, they want to capture. Therefore, this section 194 is also introduced to capture the input. This is what I think they define what is virtual digital asset under 2 subclass 27U, and that you have to see. Here also there is a threshold limit. It is more than 50,000 only, it contracts. Less than 50,000, it not. Only up to 50,000. Friends, kindly note in all TDS provisions, we have some threshold limit. Rent is more than 2.4 lakhs, you have to deduct. Up to 2.4 lakhs, no TDS. More than 2 lakhs, 30,000 per annum, DDS attract. With each section they have some threshold limit. Therefore, as a consultant, you have to see which section is applicable. Then what is the threshold limit? Above threshold limit, you have to deduct tax resource. If it is less than threshold limit, no TDS. Okay, that you have to keep it in. I am going to, because these are all provisions you can read. Next, I am going to Finance Act 2021. There, first I will take 194P. Sir, this material you can take from the institute. I want to tell what are the issues involved in the 194P. These are introduced from 1st April 2021, assessment 22-23 onwards. In this it says that under chapter they introduce the 194B. In the case of a senior citizen, depend who is a senior citizen age and other thing, then if he is getting a pension, and he is having only an interest from bank account, he can opt under 180, is an option. Under 180, any income. A person who is coming under this section, he fulfills other conditions, he has maybe 1 crore. And he is a pension income plus bank interest, then he is eligible to come under 184P. This new provision is applicable to whom? It is applicable to the bank which is paying pension to this senior citizen. It means that now the banker have to see all senior citizen who has fulfilled the age of this is 70 years, no? Age is 70 years. Here senior citizen is not 60 and above, here is 75 years age. First it should be 75 years and he is in receipt of pension. He should have only the other is bank interest. The same bank where he is getting pension. Other banks. He fulfills this condition, then we can go and ask the pension bank where he is having account. He can say that, sir, I want to go for 194P, put my income, deduct tax accordingly. It means the bank manager in the beginning of the year, you see who are all eligible under this 184P category and collect the information. Pension is having the details, as bank interest is having. These two income, what is the rate applicable? It means you have to compute the income applicable to the income, pay the tax, what is the rate which you have to deduct tax source. Maybe 30% or maybe 20%. It is not prescribed under 194P. There is only they say deduct under 192. It means that so who is opting is a senior citizen, age 75 years plus, and he is having income from pension, and he is having a bank interest. These are two conditions to be. That is, you should have a pension income. Suppose I am not having a pension income, I am having only a bank interest. In my opinion, it is not possible to opt under 194P. You should have pension income. Pension income may be a state pension or a central pension. Whichever pension he gets, he is entitled to for 194P. Condition is, should have only interest from that same bank. For example, my pension account is in State Bank of India. I am having a bank account in State Bank of India. I am having a bank account in Canara Bank. I am having SBI account only. Getting interest of suppose 25,000-30,000 rupees. Then you are not entitled. Because you are getting interest from other bank, other than pension bank, you are not entitled for 184B. Therefore, in my opinion, today, a lot of people have bank account maybe near to his house, but then he loses his conditions prescribed under this section, he is not entitled for this. Therefore, this is the very important. You see that you should be 75 years plus, you have to get pension, and you have to get interest from the same bank where he is having a pension account. These are the conditions. It is to be applicable to bank. Banker has to do that. Whether it is mandatory, banker has to call all these people 75 and say that, sir, 75, you are eligible to 194B. You can do it. You don't know what other income this man is having. Only thing is the other man declares saying that I want to opt under 194E. My income from bank interest only from your bank is so much. They will verify. Pension. Then he is eligible. Suppose he is having some other income, he is not eligible. Then opting under 194P is wrong. Then they will be liable for other consequences. Therefore, you have to advise pension person who is eligible under this section is entitled to opt. Otherwise, it is not mandatory. It is an option. Senior citizen can say, I'll go for the normal payment of return. It will give you this advantage. Once you deduct under 194, no necessity of filing return of income. This is what the one advantage. It means that person will not come to chartered accountant or to tax consultant to file the return. He is only go to the bank, declare his thing, deduct tax at source, no necessity to file the return of income. This is what the one of the requirement, one of the benefit of 194P. Friend, this is a lot of problem to the business people. 194Q, deduction of source on payment of certain sum, purchase of goods. When you know 194Q is for applicable of July 2021, it says that when you are buying a material, when you purchase a material from the seller, as a buyer, you have to deduct tax source at rate of 0.1%, very small portion, 0.1%. Buyer has to deduct tax source. Here is buyer has to deduct tax source under 194K. What are the other conditions? One is your purchase in a year should be more than 50,000 that person. Seller is 1A. You are buying more than 50,000, 20 lakhs. Then you have to deduct under this 194Q at 0.1%. And your turnover. Buyer turnover should be more than 10 crores preceding previous year. For the year ending 31st March 2022, you have to decide the applicability of this section. You have to say what is the turnover of the buyer ending 31st March 2021. If it is more than 10 crores, if it is more than 10 crores, this section is applicable. If it is less than 10 crores, section is not applicable. If anybody asks the questions to you under 194Q, you have to ask a question whether you are a buyer or a seller. If he says buyer, yes, buyer. What is your turnover for the one more question, for which year you are asking question? Whether which year in the financial year 2022 or subsequent way. Then you have the immediate preceding previous, what is your turnover? If it is more than 10 crores, then you have to, this 194Q is applicable, TDS is 0.1%, and purchase of more than 50 lakhs. Your purchase is 60 lakhs, 50 lakhs threshold limit exempted, 10 lakhs you have to deduct 0.1%. This is the requirement of the law, 194Q. But what is this 10 crores per buyer hand? Whether include GST, exclude GST. 10 crores, the limit of 10 crores, including this. Suppose take for example, you are purchasing from Mr. X. His supply is suppose, take for example 9.5 crores. But you add GST, it costs 10 crores. If it is exclude GST, not. But all the clarification given, purpose of TDS, GST while deducting tax source, exclude GST. For the purpose of determination of a definition of a buyer, a turnover more than 10 crores, in my opinion, you have to include the GST also. You have to include GST. The purpose of definition of a buyer, turnover is more than 10 crores. Only for a limited purpose of this discussion, you have to add the GST also. This is what my view, there is no clarity in the thing. Deducting tax source, include GST. This is a circular. The definition of 10 crores, whether to include GST or not, that to be decided. But my personal view is that to include it. That is it. I am going to discuss in the Finance Act 2020, there is a provision of 6C1H, tax collection at source. There also is a very clear, it says you are collection of amount from your debtor, if it is more than 50 lakhs, you are supposed to collect 0.1%, 1% TCS. For a seller, TCS applicable. For a buyer, after 1st July 2021, 24Q is applicable. Both sections are a seller, 206 1H, C1H. For the buyer, 194Q. When the transaction of this cross thing, where seller is to deduct TDS, TCS under 206C1H, where in the hands of the buyer 194Q, they said after 1st July 2021, if you have transactions, seller has to deduct TCS, buyer has to deduct 194Q, the deductor, it should be deducted by under 194Q. If you deduct under 194Q, 206.1H is not applicable. This is what the main issues in the 184Q. Clear, sir? Okay. Here is, you have to analyze both things and take it accordingly. Yes, sir. Tell me.
194 was papers.
1st July 2021.
Because of your mistake only. So that's why I got that.
Sir, you are?
I'm from Sapata. Other something.
Okay, tell me.
We are purchasing the raw material, so it is under come to the excluding the services only. So we are up to 50 lakhs. We are not deducting the TDS. Then more than 50 lakhs, we are deducting the TDS. So we are actually by now of the days only we are doing that things. But when it was the introduced,
You will introduce from 1st July 2021.
Okay.
After the purchases done.
Yeah.
After 1st July 2021.
Yes, sir.
Already in the earlier period, April 2021 to June to 30th June 2020, already done more than 50 lakhs from the same supplier.
Okay, sir.
You have to deduct from 1st July onwards.
Okay, sir.
Okay, because already you crossed 50 lakhs threshold limit, then you would. Suppose take an example,
Yes.
1st April 2021 to 30th June, you have done only 25 lakhs
Okay.
from one supplier. And your section says up to 50 lakhs, no TDS. You have to wait for up to, suppose take next consignment what you are buying from him, for example, it comes to be 50 lakhs.
Okay, sir.
Then you have done 25.
Yes.
25 plus 50, 75. 50 lakhs exempted. In 25 lakhs, deducted 0.1%.
Okay, so what is the benefit of our taxpayer? Taxpayer or we are
Sir, it is a statutory obligation. It is no benefit or loss to anybody. It is a statutory obligation casted in under the Income Tax Act. Tell me, paying taxes, what benefit you get? Nothing. No, I'm telling you very direct. As you contribute to the nation, as one of the social cause, you are contributing. Fine.
Yes, sir.
But in TDS, you are deducting because it's an obligation under the Income Tax Act. Because our auditor is telling that you have to deduct, you are deducting. Suppose if it is not there,
Okay.
it is introduced from 1st July 2021. Therefore, it is start. Suppose you are not deducted, you come to the worst situation, where you are not deducted.
Okay, sir.
You have done purchase 100 lakhs worth of material from Modi, but you are not deducted TDS under 184Q.
Sir,
The consequences is,
yes, sir.
and 1% you have to deduct.
Yes.
But under the law, under 40A, 1A, you are not deducted tax to source, 50% of 100 lakhs will be disallowed. And you have to pay all that 34% tax. That will be very costly. Better to deduct 0.1% and done with that, comply with the law. That's my advice. Tell me, sir.
Sir, we already pay the more than 5 lakhs. We pay the every month the IT returns filing only. Then again, we deduct the TDS fees only.
So 5 lakhs per month?
Like taxpayer is then yearly we are paying the direct tax. Up to 5 lakhs we have the exemption. Then more than the 5 lakhs only we are pay.
You are the individual. As an individual.
Yes, sir.
Okay.
Yes.
Okay.
Yeah. So then why again the?
No, sir. What you are paying on the income?
Yes, sir. Yes.
You please be clear.
Yes, sir.
You are paying a tax on the your income earned.
No.
During the year, suppose you earn 10 lakhs and 10 lakhs, 1 lakh 12,500 rupees, you pay tax.
Yes, sir.
That is the simple correct. What you are doing is, you as a businessman,
Yes.
you have a statutory obligation under the law to deduct and remit to the government. You are supposed to deduct on purchases. You are suppose you pay auditor fee. You have to deduct not 10%. Under 182%. If you are not deducted, 1 lakh will be disallowed. And that 30% will be disallowed. This is a statutory obligation under the law. Even though you are a taxpayer, even though you got an award for the best taxpayer award, but you are not deduct tax source for the transaction which are covered in the chapter 17B, you are liable for prosecution, you are liable for all the consequences under the act. But you cannot I take an argument before the say, I am paying promptly tax to the government. You are punishing me under for the TDS. This is a separate violation. It's a separate violation, you are liable for consequences, or all the consequences. Okay?
Thank you.
Thank you. Sir.
But purchases every month from a supplier, and we have not done TDS till date, thinking that they will do TCS. Okay, but the party has not done TCS. We came to know now that they have not done TCS. So now it becomes obligation for us to take the 9 months purchase from TDS.
Yeah, first you deduct 0.1%. Sorry, first remit to the government 1%, you recover from your supplier later. Let's pay interest for each month.
That's what.
I think that is the best option. Better do it otherwise you are liable for to be disallowed. Whatever the purchase you have done so far will be disallowed. You also have done cash, check, everything is fine. You have received the good, everything is fine. You are not compelled with this TDS provision. Is liable under 40A disallowance.
Okay, we are doing the TDS now, but do we have to go for each quarter and again file the return for each quarter?
Better is revise it.
It's no,
Better you revise it.
because there was no return. There was no TDS return for the last 3 quarters.
Then you have to file for all the 4 quarters.
All the 4 quarters.
3 quarters is only. Better my suggestion is for all the
One time deduction.
Otherwise, you say what is the TDS, get the interest liability also, pay that amount, file the return. Then you will automatically, filing return also is your obligation, in taxes to the government and interest also, all 3 complete. But I am going to take in completion part, I am going to say what are the consequences if you are not paid the thing. I will explain. But my suggestion is, don't continue that default already you have committed. Please rectify by now before 31st March. At least you before this month end, 35, 5 revision or whatever, the first quarter will revise by 31st, so 15 May. Okay, very good. In TDS, don't take any chance. If you take chance, it's a very costly chance. 30% is disallowed, that you pay 30% is very costly. No? TDS is only 0.1%. Therefore, as an advisor, as a consultant, you have to see which is more, whether paying taxes or paying the dividend. See your default. The consequences are interest, penalty, execution, deterrence. All 4 consequences start attracting. Therefore, better is you cure the defects before this previous year. That is the best option. Sir.
The pharmaceuticals, that is medicines, as well as they are rendering the services. So whether both should be clubbed together to find out the 10 crores.
Sir, he is only one associate.
Only unnecessary.
One associate.
Yes.
So he is a total turnover. He is a buyer. He is a buyer.
Yeah.
Buyer turnover purpose of basis I explained. Is what is your turnover more than 10 crores? It will be decided.
Yes.
10 crores. Your question is whether I include medical receipts, pharmacy receipts, or other receipts.
Yes.
Altogether. For the purpose of income tax, how will you compute? Altogether, you know?
Yeah.
You will immediately it says, our capitalized account, by chart account, it says more than 10 crores, and it is your account.
Yeah.
That is the basis. Because maybe you are preparing profit loss account, balance sheet, maybe 3.
Yeah, but the doubt came because 194 applies only for purchases, no? So, but it is.
No, purchases means once a day. Purchases, if it is more than 50 lakhs, it affects.
Yes.
But to determine whether you are a buyer,
Yes.
you are coming under this class, you have to see what is your turnover for the previous year.
Okay.
No, there is no purchases. But purchase applicability, you have to see the previous year. More than 10 crore, that is 10 crores, as discussed earlier, 10 crore represents GST. My issue was only GST. Your issue says that you have to include all the receipts together. Yes, all the receipts are chance. So while interpreting any TDS provisions, don't take any chance of it. My advice is always better, yeah. I think you attended my earlier sections. Golden principle, please take in view of the deducting tax source. Don't take any other adverse views on this. This is what my suggestion on this. See, I have framed some issues for the discussion. Here is because 194 is a new provision. You have to share it. Here is a seller whose turnover is more than 12 crores for financial year in 31st March. He is a seller more than 21 lakh. And B is a buyer whose turnover is 13 crores during financial year in 31st March. You mean buyer seller more than 10 crores. Fine. Which are the following transaction determined the applicable act section 184 section 206 1H. You have to determine which section is applicable. A sells a goods worth more than 75 lakhs to Mr. B in the month of May 2021. Whether section 194Q is applicable or 194 206C 1H is applicable. Sir? 194? That is very important. It is in, sir, this section is applicable from 1st July. What I am telling is May 2021. Therefore, 194Q is not applicable. 206 1H is applicable. Friends, 206 1H is applicable provided you receive the consideration. You should receive the consideration. In case of 194Q is only purchases, payment is not the case. Once you pass the entries, you have to deduct. But in case of 206 1H, you should receive the amount. Therefore, you should appreciate that the 206 is applicable when it is applicable, from which date is applicable. 206 is there from 1st October 2020. This overlapping section 194Q was introduced on 1st July 2021. Therefore, you have some problem after 1st July 2021 whether 194Q or 206 1H. I told you very clearly, if it is 194Q is applicable, buyer should deduct TDS under that section. TCS deducting is no, but you have to deduct. Therefore, you have to tell your seller, I am going to do 194Q. I am deducting under 194 1.1%. Therefore, don't collect TCS after 1st July 2021. You have to be very clear. You have to have a discussion with your seller so that he will not tax collect. Suppose he also collected, you also deducted, there will be extra. Anyway, percentage very less. My suggestion is 194Q is overrides 206 1H. Therefore, buyer is concerned, he has to follow 194Q. This is what I want. Next is B, purchase a fixed assets 100 crores from A in the month of June 2021. First, I want to tell you 194Q is applicable for any purchase of goods. Any purchase of goods, whether revenue expenditure or capital expenditure, it is applicable, but only from 1st July 2021. In this case, is June, therefore it is not attracted. But TCS in the case of seller, he will collect. B, purchase a fixed asset worth 150 lakhs from C, whose turnover is less than 10 crores for the year ending 31st March 2021. Here is B, purchase fixed asset 150 lakhs from C, whose turnover is less than 10 crores for the year ending 31st March 2020. I want to tell you here in this issue, seller turnover is no criteria for 194Q. For 194Q, only buyer turnover is very important. In this case, buyer turnover is more than 10 crores. And when you are buying a material more than 50 lakhs, here is 150 lakhs, 194Q is attracted and is liable for TDS. Here is the estimated turnover for 31st March 2000, no criteria. You have to say immediate preceding previous year turnover. In this case, 31st March 2021, the buyer's turnover is more than 10 crores, 194Q is applicable, even though for the subsequent period. Take for example, 31st March 2021, my turnover is 13 crores. For 31st March 2022, my turnover is 8 crores. Still 194Q is attracted for the financial year 21-22. Next year it is not applicable, because immediate preceding periods my turnover is less than crore. This is what I wanted to highlight here. Friends, 194Q, I am completing now. I will go to the next thing, next issues on this. If the non-resident is a buyer, whether this 194Q is applicable, friends, kindly note, this is applicable only a resident buyer, it is not applicable to non-resident buyer. My friend will address during his presentation on this, if 194 applicability to non-resident, my opinion is not applicable. Next question is whether tax to be required to be deducted under 194Q when a seller is a person whose income is exempted. This is a very interesting thing.
Take for example, lot of Arcana traders. I am auditor for a lot of Arcanate traders. They are buying Arcanate from the agriculturist directly from farmers. They will buy. It is permitted now. APMC Act is removed. Now they can buy. Only thing is the all other charges and other things they have to pay. There is a different question. Now they are buying a material from the agriculturist directly. Take for example, I am buying more than 50 lakhs. Whether I have to deduct TDS under 194Q? There is a question. Where the other side, the agriculturist presume that he is not having any other income, only he is having agriculture income, he is not filing return at all, he is not required to obtain a PAN number. Then what I should do? As a country, you tell me whether to deduct tax source or not to deduct tax source. Yes, sir? Purchase is more than 50 lakhs. He is an agriculture, that's all I know. I don't know other details. Whether it is liable, maybe he is having a bank interest, whether it is more than that. There is a circular issued by the board after the 194Q is introduced and 194O is introduced. They clarified saying that the income is exempt under section 10. Unconditionally income is tax free, then you are not required to deduct tax source. But how I know other person income is fully tax free? The agriculturist is having a agriculture income in the earlier year. Suppose he is having a bank deposit of maybe 1 crore. He is getting interest altogether maybe on 7-8 lakhs on which he is liable for tax. He is not tax free. Central income is there and he has to file the return. Maybe he has not filed. How he as a buyer imagine to the other income, other person, seller's activity and take a call that whether. Therefore I advised, sir, if it is a purchase in a year is more than 50 lakhs, please deduct under 194Q. But they split the transaction, see that it is less than 50 lakh. So the 194Q is not attracted. But exempted means you should be very careful. It is unconditionally exempted. Agriculture income, bank interest, agriculture income is to be included for the purpose of rate purpose. Therefore, you should be very careful. Only exempted income under section 10 it can be considered, not other. Whether you have to deduct tax source under 194Q on advance payment, answer is yes. When you make the advance payment, you have to deduct tax source under 192. And only thing is next is question is next the year is you have to deduct TDS under advance payment. But only thing is suppose you cancel the transaction. What happens? Because I made the advance payment, subsequently not materialized, I will request him to refund. What will happen? Circular says that suppose if it is a transaction, one cancel, it cancelled, but you have any transaction with that fellow that he can adjust against that. If it is not there, no answer. Circular says only if we have a transaction, please adjust in the subsequent. If it is not there, no clarity. No clarity. Therefore, advance payment you have to deduct tax source under 194Q. Next is regarding 194Q of the Act is applicable to a buyer in the year of incorporation. This question is, suppose I incorporated the company in the 2021-22. I don't have any transaction in the earlier year because I incorporated only now. Therefore, 194Q is not applicable in the first year of incorporation because you don't have a turnover for the immediate financial year. This section is not applicable. That's what I wanted to highlight on this. Less than 100 crores, less than 10 crores, 194K is not applicable. And for the under 10 crores is only business. He asked what is the 10 crores is a business receipt, then it will be attracted. But in your case, pharma business also business receipt, medical receipts also business. Therefore, both are to be clubbed and if it is more than 10 crores. Next is that sales or gross sales turnover from business carried on by a person must exceed 10 crores. His turnover receipts from the non-business activity should be excluded. This is very clear. It means, take for example, I am having a turnover of business is 8 crores. I am having a rental income of 5 crores. Both together is more than 10 crores. But this section is not applicable because non-business activity should be separated, which is assessed under other heads of income. Only under the business, if it is assessed, and it is more than 10 crores, then this section is applicable. That's what I think is answer your question on this. I told you earlier, when both the section 206C1H and the 194Q is applicable for the same transaction, seller 206.1H is applicable, buyer 194Q is applicable. This is after introduction of 1st July 2021 194Q, the duty of the buyer to deduct tax source. He overrides the 206.1H, therefore TCS is not attracted. Only 194Q is attracted. It is a must. Buyer's obligation to deduct taxes under 194Q. He cannot say, sir, he is supposed to deduct, sir. I don't know why he has not collected taxes. That is not the answer. But your obligation is to deduct taxes once you are fulfilling the conditions specified under 194Q. This is the thing I wanted to share with you. Whether section is applicable to a professional payment? No. Very clear. It is only a business receipt or goods. Purchase of goods is covered. I already whether GST should be included while deducting tax source. GST should be excluded. There is circular. Only on the purchase value other than GST you have to deduct taxes at 0.1%. For determining turnover of a buyer, 10 crores whether to include GST or not, I told you already my view. You have to include GST. This is my personal view. There is no clarification board or anything, but better is include GST, find out what is the turnover. If it is more than 10 crores, in case in the hands of the buyer, better to deduct under 194Q. Advance payment already I discussed. You have to deduct tax source under 194Q and advance also. This is very interesting now. Suppose you are buying from a person, take for example XYZ Limited. He is having maybe 5-6 branches in various states. You understand? Suppose they have a branch in Karnataka, branch in Tamil Nadu, branch in Delhi, branch in Jaipur, various places. GST numbers are different. But PAN is only one PAN. Okay? Now, for determination of the 50 lakhs of this as a buyer, whether you have to include all the, because you are buying from all the 5 branches. Maybe one branch 20 lakhs, another branch 15 lakhs, another branch is like that. Altogether is more than 50 lakhs. Whether for the purpose of this determination of 50 lakhs, whether it include all the branches purchases and determine whether 50 lakhs more. My very clear, all branches together, even though GST numbers are different, but assessee is one person, therefore it include all purchases made by the branches together. If it is more than 50 lakhs, this 194Q is applicable. Purchase return, I told you already, circular and they were very guidelines, there's a called guidelines under 194Q. They say that purchases when you are returned and you already deduct tax source, this is what you have deducted, you can adjust in the subsequent transaction with up the same supplier. If it is there, you can continue. Suppose it is not there, no clarity, question mark. If it is there, you can adjust. This is the circular clarification. Whether the circular, this purchases is applicable to APMC agent. There is a very clear APMC agents also covered under this 194Q. Earlier, APMC agents they are not a sellers, they are not a buyer. Actually, today also their position is they are agents. On behalf of the farmers, they have not purchased, they will coordinate with the seller. In the APMC yard, what will happen? Agriculturals come to the APMC yard, they say that product you want to dispose of, and they will sitting and waiting for the action. Then the trader will come for the action, they will see the material and they will quote what are the rate. If it is agreeable to the farmer, then the deal is concluded by raising a B bill. A bill, B bill. There are 2 bills they will raise. That time when this APMC agent is not buying, he is buying on behalf of the Mr. Trader. Actually in his books this is not a purchase and as well as is not a sales. For the purpose of GST, is considered as a purchase, is considered as sales. X purchase, X sales. They will not be. Only thing is you collect commission from the trader at the rate of 2% or 3%, what are the permissible. For this purpose of 194Q, even though in my books is not a purchases, whether I can consider 194Q and deduct tax source under 190 0.1%. 0.1% we have to do it. My personal view is, it is not a purchases by the APM's agent or a trader is not purchased from me, is a purchase from the agriculture directly. If he purchase from directly agriculture, he is only coordinator between both of us. Therefore, it is not a purchase transaction. You are buying directly from agriculturist. It is outside the 194Q. That is my personal view. But you can enlarge to any extent you want. But this is what they link. But please examine. Suppose you are buying from an agriculturist and his total purchases from that agriculturist may be more than 50 lakh, then question arises. Then again 194Q is applicable. But I am talking an agriculture where less than 50 lakhs from each farmer. If it is more than 50 lakhs, then applicable. Then circular says his income is exempted under 10, then automatically it is not required. But agriculture income of agriculture who is getting this so much, whether he is having other income or we don't know. He may be having rental income, maybe he is having bank interest, other thing. That is, you have to examine. Then if he is fully exempt under section 10, then you can give exemption, otherwise no. This is also new provision introduced from 1st July 2021. Friends, this is a very, very difficult task to the deductor. This 206 AB, what it says is, as a deductor, earlier section says 194 say deduct at 1%, deduct at 2%. 194 say deduct at 10% professional payments. But now they say, as a deductor, you have to see whether the person whom you are going to deduct, whether he has filed the return or not. How many years? 2 years. You have to see the latest 2 years whether he has filed the return or not. And one more condition, TDS and TCS in his hands is more than 50,000 or not. See, this is my responsibility. Hooray, I have to deduct tax source. This is one of the statutory obligation, I do it. Apart from that, I have to see that 206 AB requirement. In 206 AB, I have to see, go to this thing and check whether he has filed the return for the latest 2 years for which the due date is already expired. Take for example, 31st March 2021, due date is expired yesterday. You have to see from today whether he has filed for 21 assessment in 21-22 and 2021. If he has filed, no problem. You deduct at the normal rate at what are the prescribed under the Act or the first schedule to accept part 2, first schedule, you have to see that. If it is not so, he has not filed return of income, then you have to deduct at double the rate prescribed or double rate in force double or 5% minimum. Whichever is higher, you have to deduct. Take for example, you are a chart accountant, you have rendered a service and you are getting 1 lakh fees from some client. Your client has to see whether Venkatesh has filed the return of income. And he has filed the return for the latest 2 years for which due date is over. Suppose I have not filed, then deduct TDS at 20%, because 10 is the normal rate, twice, 20%. This is the punishment for not filing the return by the deductee. That punishment, the income tax department let them levy, not the deductor. I have to do business, I have to earn some money for myself living. Apart from that, now I have to look after all this section 206 AB. Friends, these are all the very, very lot of responsibility to the deductor. I was telling one of the big in-house program, telling earlier, they said there's a bank. I was telling, in bank usually you have a general manager advances, you have a general manager deposits, you have a general manager for general banking. I was telling you should create one more post called general manager TDS compliances. That fellow, his duty is only to comply with all the TDS provisions, because so many provisions are there. You have to see 206 AB and check everything. Now I think they have a functionality test where you can check whether DR Venaktesh has filed the return for the last 2 years. I think if you go that it is there, then you keep that on record, saying that he has filed the return, then deduct normal. If he has not filed the return, deduct the twice rate. Then also, if you are not done, then is a violation. Then 40A1A is attracted. interest is attracted, penalty, prosecution, everything starts. Therefore, be careful. 206B says that you have to see whether this fellow who you are having a transaction is a deductee, whether he is a prompt in filing the returns. If he is prompt, at least latest 2 years is fine. For which he has filed the return, you have to ensure. Take for example, deductee. He started business only last year. Earlier he is unemployed, he didn't have any income, he has not filed the return. But this law says that you have to see for the latest 2 years. How I can see 2 years? Because he is not filed at all. Then the question arises, you have to deduct it. Because clarity is not there, there is no circular on this. Person who start, at least if there is a circular under 194K, if he started only here, then this provision is not applicable. For 206AB, no such thing. It means that a person who is dealing with you, he should file the return of income. Whether he is having income or not, nil return you have to file. And show that sir, I am filed the return. Requirement is file the return. That's why I filed the return. Nil income is nil. Don't bother. Only you have to give the assignment. Give the assignment. Then you deduct at a normal rate. This is the additional responsibility to a businessman. It is not so easy. I understand my young friend has raised saying that, sir, what I am paying tax of on 5 lakhs, why I should do this additional work. But this is a statutorily recognized, statutorily imposed obligation on you. You should discharge as a businessman. You have to discharge. There is no option. Other consequences are too much. I am going to discuss consequences, then you have a problem. In this 206B applicable to all the TDS provisions except 192, 192A, 194B, 194BB, 194LB and 194N. For this section, 206AB is not applicable. All other section, you have to ensure that this section is complied by seeing that whether the person has filed the return or not. That requirement is a must. Okay? Twice the rate applicable is, in this case, is either of the following. Twice the rate specified in the section, relevant provisions of the Act, or twice the rate in force, or 5%, whichever is higher. Only in 194C, 1% means 2%, 2% means 4%. Only in this case, 5% you have to apply. When they work out 206AB, then 5%. This is the requirement. Once you pay the taxes under this section, you are entitled for the full credit. Suppose TDS deducted 20% instead of 10%, 20% TDS credit is available to you. The department cannot say, no, you are required to deduct only 10%, they are deducted 20%, 10% I will not give credit. No. TDS rate, whatever may be your, whatever the credit available in the 26 form 26 says, you are entitled for that. This is the 206AB. 206B continues that whether TDS to be filed for both the years. This is a very interesting question. They say you have to file for the latest 2 years. Whether what the wording use is not filed for both the years. It means one of the year I filed, then you will escape from this. Not filed for both the years means if both the years you are not filed, then you are a non-filer. Suppose one of the year is you filed, then you are escape from that. These are all the argument I am telling, but don't advise your client. One of the year is enough, then you will say only 1 year. You tell them very clearly, you have to see both the years is filed, then accordingly you apply the. And TDS will be more than 50. See, you have to see what is the TDS is more than 50,000. Each year should be more than 50,000, you have to see. What is this? That person who is filing return, who is dealing with me, is a deductee. Suppose I am making 20,000 payment or 30,000 rupees payment under 184J. I have to see whether what is the TDS in the earlier 2 years, whether more than 50,000. If it is less than 50,000, no problem. As per his return, his TDS in the latest 2 years is more than 50,000. TDS plus TCS. For any reason, suppose he is not having any transaction, he is less than 50,000, therefore this section is not applicable. You see that you have to file the return, and after filing his TDS or TCS together, for both the years it should be more than 50,000. Then only this section is applicable. See how difficulty for a businessman. I read 206 AB. I know simply straight away say deduct TDS under 194C at some rate is fine. I'll see the act and but you have to do so many other verification work. Whether he has filed the deduct, he has filed the return. After filing return, whether it is a TDS and TCS, all this is have to keep record. Take for example, in a big mining companies, they have a contractor of 2,000 to 3,000 people. Imagine you have to keep all these records. His big job. No benefit, no commission. My friend is telling, no commission I am getting for that. But I have to do obligation. If you recognize this entirely, at least not levying penalties is big recognition. Okay, not levying prosecution is a big recognition. You deduct TDS and remit the amount in time, not levying interest is also. Otherwise, they are interpreted in a different way. Sir, it's a very difficult TDS provisions today, not a simple. Sir, earlier to 85, earlier is no TDS, because youngsters either I want to share with you, earlier no TDS section at all. One person, income tax officer, while doing assessment, used to ask whether you are deducted. We used to say yes, sir. That's all. Without knowing what is the provision, we used to say yes, sir. We are deducted taxes. After that only you'll come to know, we'll come and discuss which section is applicable to this TDS, whether it's done or not. There is in tax audit report also no such questions asked. Therefore, we are very relaxed. Tell the one officer, fine. I don't know, one officer was there earlier. One officer in the income tax office, Queen's Road, Paramatma, I don't know whether he's today is alive or not, he's a very senior man. He was very, very updated on TDS provisions. He used to ask questions on it. Whether you deducted in this, deducted in this, deducted. Other officers used to ask whether you deducted. We would say, sir, we deducted. But this man used to ask questions on all the provisions, whether you deducted, this transaction, whether you covered, like that. But after 85, this now is a separate wing, TDS wing. Here is we have a TDS commissioner, chief commissioner of income tax TDS. I think there are going to be a proposal before the CBDT. They want each section separate commissioner. See, here is a one commissioner TDS. They want to have a commissioner TDS salary, commissioner TDS rent, like that they want to have a separate commission. It means that their collection is from the TDS circle is very good. They want to increase scope and collect whatever the maximum possible. Whatever assessment is anyway, is a faceless assessment. They'll ask all the details, whatever you filed online, you will get the assessment. But TDS is, now they want to see more compliance from the other end officers, from business people. They want to see that everybody should comply with the provisions. Earlier, subsequently, this is what before 85, slowly, then they introduced in the tax audit report, from 3CD, the class number 23 of the 3CD earlier, not now, earlier, they used to ask a question, whether you complied with a chapter 17B. If you say yes, no further questions. If you say no, then there is a question, whether you are not deducted tax and which section, how much the amount involved. And you are deducted, not remitted, one more class. Deducted, delay in remittance, there is one more class. Like that, they have to ask questions. That was a provision earlier. Now, straight away, they will not ask whether you completed chapters, no. Whether you are deducted, when you are remitted, deducted, delay in remittance, whether you have paid 2011 interest, when you are remitted, amount involved, amount. Like that, directly to the point, final point. They will not allow any discussion thing. You have to give the figures. This is the scope enlarged. Anybody is interested, you want to do research on this tax audit, start from 1984. Then Finance Minister Pranab Mukherjee was there. He has introduced this section 44AB. From 44AB, what was earlier, what is today, do the research and why this so many classes added or so many classes deleted. Thanks, because so many classes are deleted. One is a traveling expense earlier. You used to give a traveling expense details, like name of the person traveled, number of days travel, to and fro, then date, stay, allowed. That time was 100 rupees, 60 rupees, 50 rupees was allowed. That, what is the excess amount? You have to compute. We are the auditors for Tumkur, we are the auditor for HMT. Imagine in HMT how much people travel. Giving traveling details in that HMT tax act is a big issue. And we should have voluminous transactions, you are not punished on general comment and leave it. But it is not. Then finally they removed it. But today they are asking all questions to disallow. You see the tax act report, any class, it leads to disallowance. You have to expense to be allowed or not. They will ask question whether any personal expenditure, capital expenditure. If it is there, if you say yes, simply they add. There will be careful when an auditor, when you are mentioning these all the classes, by oversight, you mention personal expenditure debited to profit and loss account 4 lakh, it will be disallowed. It's automatic. And now they say, your tax act report you uploaded 1 month before your due date for filing return. What for they want? They will not believe the auditor. I think something unfair. But why you want? What is the purpose? You tell me. Sir, I cannot finalize the accounts without the what is the final tax payment other. That you have to see what is the tax final payment. You have to pay, then I have to remove. Take for example, friends, what is the difficulty you are facing? GST. Under 43 it should be disallowed. 43 will be disallowed. Suppose some 50 lakhs liability is there in my balance sheet. The due date for filing, due date for payment of this tax to avoid 43 disallowance is up to the date of filing the return of income. It is there up to 15th March. But I have to upload my tax act report in 15th February. How address this class, you tell me? I have to answer this class. What I have to say? He has not remitted. If he is not remitted, it will be disallowed. Automatic. No, this is the practical difficulty to the assessee. Sir, you want to do, everybody have to do business very smoothly, easily, without any error. But what is this class? What do you achieve by uploading my return 1 month in advance? Why you want? You tell me. Government, you tell me what is the purpose, I will appreciate. And tell me how you have to address this problem. GST, 1 month in advance. My assessor says, sir, I will remit, sir, before filing return, he'll tell. As a businessman, he have to tell, he'll tell. But I have to put in my report. Assessor has given undertaking that he is going to pay before this date. Based on this undertaking, I agree to this mention. Or I have to mention that 43B not disallowed. I think these are all the things, grey areas where we are in problem. Therefore, if we see the tax act, how it is from 85 to 2022, you can see that what are the changes. Unfortunately or fortunately, I was the chartered accountant from 84 to today. I know all the problems of this tax audit. I addressed a lot of tax audit cases in 85, 86, then subsequently in subsequent period. Every year we have a problem. Therefore, I can share with you what problem in 84, what problem in 90, 86, 2022. I think, friends, is our responsibility, our challenges to chartered accountants is too much. I think you have to face with it. Otherwise, as a practicing chartered accountant, everybody blame, sir, chartered accountant has not done proper work. Simply say, if you go to a big organization, they say, why you are not done? They will ask as if you are there. See, I faced in one of the big clubs in Bangalore, I was the internal auditor. See, internal auditor has to do financial transaction. One day in that club, in a cycle stand, there is a quarrel between the two members. How I know it? There is a police complaint. They say, why, one of the members is asking, why the internal auditor has not reported this? I told, I am auditor for only financial transaction. I am not auditor for the member who fight in the kitchen or a bathroom or a cycle stand. I am telling this type, the expectation from a chartered accountant is too much. Once I sign as a chartered accountant any report, they think that everything is cured. Everything is fine. When it comes to fees, any point regarding fees, very too much. Enough. But this is their lot. I think no, the expectation of the public from the chartered accountant is too much. Therefore, as a chartered accountant, you should be ready for the challenge. You have to face the challenge in the public. Then only you will be successful. Okay? This is what you have to keep in mind. Anyway, I will come to the topic 206 AB. Similarly, for TCS 206 CCA, same provision. There also, they say that twice the rate if you are not filed the return of income for the latest 2 years. I'll come to the Finance Act 2020. It's a very interesting this one. What time you want a break? 6:30 now. Sorry, sir, 5:30. Is sir? Huh? 5:35, sir, yoga. In a yoga, tiffin ready is no day. By the time I'll finish one class. Sir, this section 194N introduced from 1st July 2020. It says that any bank, including Cooperative Bank or Post Office, when they giving cash, hard cash, more than 1 crore, first I'll discuss first provision, more than 1 crore to anybody, deduct TDS at 2%. Up to 1 crore exempted, more than 1 crore, deduct 2% TDS. This is the provision introduced from 1st July 2022 up to that date was June, no? Sorry. Introduced from 1st July 2020 up to August 2021, there was the thing. Subsequently, they changed. I'll give the date, exact date. They say that when you are drawing from a bank as a current account or SB account, any account, you are drawing more than 1 crore in a year, not each time. Kindly be noted that each more than 1 crore in a, then if you draw more than 1 crore, deduct TDS 2%, that's all. As a person who is drawing the amount from that, he should reflect it in the 26AS or any other information statement submitted by the banker to the income tax department. You have to answer at the time of assessment. This is the only thing. It is not an income. I was telling in the earlier, TDS attracted only on income first. Now it is not income. Expenditure also attracted. Everything is in the hands of the banker is not income at all. Or in the hands of the person who is drawing is not income at all. But still you have to deduct TDS under 194N. This is the provision introduced first. It says if it is more than 1 crore, you have to deduct taxes. This is introduced from 1st July 2020. What happened? 1st April 2020 to 30th June 2020, you have done 10 crores already, no TDS. No TDS. This section is not applicable. But you have drawn already 50 lakhs up to 30th June 2020. You go to bank later, then already you have drawn 50 lakhs. Next you are drawing is suppose 25 lakhs, no TDS. Next you are drawing another 25 lakhs, no TDS. Once 1 crore threshold limit of 1 crore is crossed, then whatever the amount you draw in cash, then 2% TDS is attracted. This is the original provision. No question of filing return of income, it is not there at all. It is only while drawing amount, cash is more than 1 crore, then you have to deduct tax. 1 crore per year. Kindly note is 1 crore per year. Therefore, the banker has to keep track of this person who is drawing the amount. SB account or current account or OD account, whatever the hard cash drop from the bank is attracted. Cooperative bank also is covered. Post office also is covered. Only the bank is drawing from another bank, it is not attracted. ATM operator, wherever that ATM refilling cash deposit is not attracted. Only when a draw by any person, whether it may be a company or an individual or a HEF or a partnership firm is more than 1 crore, this provision is applicable. Now, they introduced from, I should tell 2019 provision, after that I'll tell you. Small slight this one is. This section 194 is introduced through Finance Act 2019, effective from 1st September 2019 to 30th June 2020 was this provision, what I was telling, up to 1 crore. If it is more than 1 crore, 2% is TDS without any other thing. Now the recast stated is the new provision from 1st July 2020, it means 1st September 2019 to 30th June 2020, one provision. in which there is no bifurcation. They say if it is a cash withdrawal is more than 1 crore, you have to deduct TDS at 2%. Now from 1st June 2020, they say that cash withdrawal will be, you have to see whether the person who is withdrawing the cash from the bank, whether he is filing the return of income. You have to file the return for 3 years. Latest 3 years he has filed the return or not. Banker has to collect the details of the account holder, whether you are filing return of income. Update in the record saying that whether he has filed the return for latest 3 years. If he has filed the return for the latest 3 years, then threshold limit for cash withdrawal is 1 crore. TDS is 2%. Any amount you draw, it is 2%. But he has not filed the return for one of the 3 years for any reason. Then threshold limit for cash withdrawal is 20 lakhs. Instead of 1 crore, it is reduced to 20 lakhs. Up to 20 lakhs, no TDS under 194N. If you have 20 lakhs to 1 crore is 2%. More than 1 crore is 5%. This is an award for not filing return in the latest 3 years. Any 1 year you have not filed for any reason. Maybe any reason, that is no excuse here. You have not filed the latest 3 years return for which due date is over. You are not given the details to the banker. Then you will be TDS threshold limit is 20 lakhs. 20 lakhs to 1 crore is 2%. More than 1 crore is 5%. Therefore, a banker, any person account holder comes for withdrawal, and you have to see whether he is a update income tax return filed. If he is filed, fine. Up to 1 crore, no TDS. If it is more than 1 crore, you have to deduct TDS at 2%. Person is not filer. He is not filed return for the latest 3 years. All the 3 years he has not filed, or 1 year is missing. Then you have to deduct TDS more than 20 lakhs. Kindly note, more than 20 lakhs, 2%. Up to 1 crore. More than 1 crore, 5%. This is the provision in respect of 194N. This is a cash withdrawal TDS. They want to discourage cash withdrawals. That's what our Honorable Finance Minister said in his thing. After 2016, they want to see that wherever possible, put the lock that nobody should operate for cash. This is the purpose for which this section was introduced, but still is a practically lot of difficulty. Contractors, persons who are dealing with agriculturist, all things they have to handle cash only. But the department says if you cash handle, you will do some mischief to the income tax department and you are not paying proper tax. Therefore, you have to do all the transaction in check. That is the thing. Whether there is a check, I had one of the occasion while dealing with the right cases, but all checks are there. It is gone from bank, everything is there. But that bank account is not recorded anywhere. You understand? But you see that all transactions are check transaction only. But if we see, come to that bank account is not recorded anywhere. This is the worst. But he knows this is a transaction. At least cash transaction he wanted to avoid. It is fine. Here is check transaction, but is not recorded anywhere. As auditor, what you will do? You have to take an undertaking. All bank accounts are recorded in these books of accounts. They ask the auditor, your auditor, why they are not recorded in this transaction? You have given a certificate. But I told what record transaction is recorded in the books of account is pakka. If it is not recorded, it is not recorded. Receipt is not recorded, payment is not recorded. This transaction is. Therefore, they want to avoid cash transaction. That is the purpose for which this section is introduced. But practically they want to see how this is going to achieve. But because of that, now the businessmen aware. TDS comes means, they are afraid. Income tax people. If auditor says don't withdraw, they will not bother. But if he says that the income tax people are asking questions, then I think, sir. This is the requirement. I think we'll break for some coffee, tea. 1 minute. Tea. After that, Mr. Sandeep is taking over and giving a non-resident taxation for 45 minutes to 1 hour. Then I will come back with the remaining sections. I will try to do before 7:15 allotted to me. If it is not there in 10-15 minutes, it will be exceeded. Sir, what is the question, sir? Bearer check also. Oh, sir, the department is very clear. Account pay check is only thing is allowed. Bearer check also included, self checks also included, any other way. Bank, if you go and talk to the manager and draw, buy a paying slips or whatever, this bearer check, this one, it is also included. Only you have to do only account pay transaction. NEFT transaction or RTGS or account pay checks. Anything bearer checks also is covered. This, and also you see, if you see the financial information thing under 285 BA, it is not a TDS, it say that cash withdrawal from SB account more than 10 lakhs automatically reflected. Current account more than 50 lakhs including bearer checks. More than 50 lakhs is automatically reflected. There's one more section is there. This is only TDS under 180. This is from the banker side. We have to do it. Banker's duty to deduct tax source under 184. Other with this one is person who is dealing with that, they'll automatically upload the transactions which are covered under 285 BA. This is what I want to tell. Now we'll stop. Okay, sir. Ma'am, I have not covered at all. Friend, I have not covered. If you permit, I will, with the permission of the branch, with the dinner, we'll discuss that all. Thank you. Thank you. 10 minutes. 10 minutes for break.
Welcome back, members. We had a wonderful session by DR Venkatesh sir. Now I would like to introduce CA Sandeep Chalpati, who is also a partner in MSSV and Co. He was a faculty in Universal Academy for Statistics and Business Studies for a period of 3 years for pre-university students. He was also a faculty in CAPS for CPT coaching and for mathematics and economics. He has conducted various seminars on topics like e-filing of returns and form relating to TDS for employees of Cooperative Apex Bank. He has presented papers in various seminars on income computation, disclosure standards, and taxation of cooperative societies and banks in ICI and other CA fraternity programs. So I would like to hand over it to CA Sandeep for to take over the dais and enlighten us about non-resident topics. Thank you.
Thank you, sir. Thank you so much for this opportunity. So I'm very lucky today that because usually I'll be handed over the session only after lunch. Even though I'm having an every session an interesting topic, people will be sleeping. So today I'm very lucky that immediately after tea I got a session so that everyone is awake, even though I have a boring session. Okay, starting with TDS on payments to non-residents, basics and updates. Why I'm dealing with basics is because when I have to give an update on this one, I just want to give the basics or foundation or the first step for this kind of deduction on payments to non-residents. Nowadays, for the world is becoming small and the transactions are becoming very, very easy, even though it is different between different countries, different continents, different regions. Therefore, the verification of the transactions between these two countries, all those things are also having matters. The payments to non-residents, any payment is being monitored by multiple authorities. We may think who will get to know, but any payment, even though you have not reported through Form 15C or Form 15CB anything, every transaction is being reported by, monitored by RBI and income tax and other multiple authorities which are coming under economic offenses. Therefore, we should be very, very careful when we are making the payments to non-residents, because that have a very, very big impact on the assessees if they have not reported, which ought to have been reported. I am covering main topics with respect to this TDS on payments to non-residents, which is section 195, section 9, relevant rules under income tax rules, and Form 15C and 15CB. I'll not be completely dealing with double taxation avoidance agreements for the sake of time, but I'll be giving a brief or broad idea about this DTAA so that we'll be having an understanding when we are making the payments to non-residents about the TDS. So starting with section 195. Section 195 is an enabling provision for deducting tax at source on the payment made to TDS to non-residents or a foreign company. So this is also similar to other TDS provisions where the deduction of tax at source will arise, the liability or the responsibility to deduct tax at source arises at the time of credit or at the time of payment, whichever is earlier. So this is also similar to 194C or 184G, wherever it is there. When it comes to, and second, another point is when it can be credited to any account, this provision is applicable, whether it is a suspense account or it is an interest payable account, irrespective of which account it is being credited, the TDS provision will be applicable. Why I'm saying this an enabling provision is this provision does not give which all the transactions are liable to TDS, but this transaction shows the procedure and enables the assessee to deduct tax at source on the payments made to non-residents. That is the reason I have told enabling provisions and not charging provisions. Here, the deductor can be any person or resident or non-resident. Even a non-resident is making a payment to a non-resident, also sometimes liable to deduct tax at source. People will be having one misconception that in case if a non-resident is paying to non-resident, both are outside the purview of the Income Tax Act, why should they deduct tax at source? But in case if there is a significant economic presence of that non-residents who is being deducted, who has been deducted in India, in that case we have to, that non-resident has to deduct tax at source and he is liable for that. So therefore the deductor can be any party, that is any person like resident or non-resident. TDS has to be made on two things, very specific or very broad thing has been covered under this section. One is interest. Why they specifically included as interest is because they don't want to disconnect or uncover 194 LB, LC, LD interest. That is the reason they have covered, they have used an expression specifically as interest. And they have used expression called even salaries also. With respect to next, coming to any other sum chargeable under the provisions of this act. As I told you, the broad section is covered because any other sum chargeable under the provisions of this act. So if I make a payment, we have to arrive whether it is first the sum chargeable under the provisions of the act. That doesn't mean that that amount, whatever is being paid, is a profit or is a loan or is a borrowing or any advance. Irrespective of anything, we have to arrive whether it is chargeable under the provisions of the act. For arriving that conclusion, we have to refer other sections and DTAA. But section 195 is very clear that any other sum chargeable under the provisions of the act is liable for TDS. For example, if I give a loan to a non-resident, whether it is covered under 195 or not, no, because it is not a amount chargeable under the provisions of the act. How do we know? One is loan transaction. As a first principle, we know that loan transaction is not taxable. Second, we have to, in case if there is a confusion, if there is any ambiguity, we have to go to refer section 9 to see whether this particular transaction is liable to tax or not, or chargeable under the provisions of the act or not. This, any other sum chargeable under the provisions of this act may not be only the profit, even gross receipts also sometimes. I'll be coming to in subsection 2 deals with this exact thing, where whether it is only profit is liable for tax under section 195 or the entire gross receipts. Unlike when it comes to 194C or 194G, the specific thing, there is a specific expression used called gross receipts or any sum payable. Even though if I'm paying 1,000 rupees to a contractor, or example 1 lakh rupees to a contractor under section 194C, I have to deduct tax at source. Even though his profit is only about 5% or 10%, but we have a liability to deduct tax at source on the entire amount. But here, though the main provision under subsection 1, they use any other sum chargeable under the provisions of this act, they have given one benefit to the deductor, and under section 195 2 and 3, subsection 2 and 3, they have given the benefit for deductor and deductee to arrive at specific amount which is the profit or which is the chargeable amount to the act, so that only on such amount, only on that proportionate amount, the tax can be deducted. So rate of TDS as specified under section 195 are two things. One is rates in force and section specific provisions of the act. Rates in force, lot of people will be confused what is rates in force. They'll go and refer DTAA. Rates in force is part 2 of first schedule of Finance Act, any Finance Act. For that applicable, whichever the assessment here it is applicable, part 2 of the first schedule to Finance Act, where for all the transactions, there will be a rate until and unless it is covered under specific provisions like 115A. Section 115A provides rates for dividends, interest, royalty, fees for technical services, where the TDS rate varies from 5% to 20%. So there are two things. One is in case if I'm making a payment of royalty to any non-resident, I should go to 115A to see the rate. Section 195 says that it is whether it is a specific provision or rates in force. So I have to go to specific provision, that is 115A. Whether that royalty is chargeable to tax or not, we have to go and refer section 9. This is the basic flow of ascertaining whether a transaction between a resident and non-resident is liable for tax or not. So the net, as I told you, section 195(2), the net income can be considered for TDS instead of gross assets. As I told you, when there is a for payment for some services, let us say the payment is about 1 crore, and the deductor thinks that the taxable amount is only about 40 lakhs because 60 lakhs is his expenditure, that is the deductee's expenditure. 40 lakhs is the amount chargeable under the provisions of the act. The deductor will be having a chance to deduct tax at source only on 40 lakhs instead of the entire 1 crore, which is being gross receipts. But there is a subject to this. One is the AO should decide if the deductor is of the opinion that the entire consideration is not taxable. He has to make an application to the assessing officer providing all the details and documentary evidences to prove that this amount is chargeable to tax. Once the certificate has been issued by the assessing officer, TDS officer, which is in international taxation, then the deductor is liable to deduct tax at source only on that specific amount. If, as I told in my earlier example, 40 lakhs is liable, I have to prove that how only 40 lakhs is liable for TDS. I have to give documentary evidence to that. Until and unless I satisfy the AO, I cannot deduct tax at source only on the amount 40 lakhs. My liability to deduct TDS at tax at source will be on 1 crore. That is gross assets. This is as per pure understanding of the provision. When it comes to section 195(3), this is earlier section 195(2). It was the duty of the deductor to make a certificate before the application before the AO. But here, deductee, if he is of the opinion that his amount is not liable to tax in India or only proportionate income is liable to tax in India, he can make a application to the assessing officer TDS for deduction of tax at source only on specific amount. This is very similar to the provision of section 197, where we'll go and approach the AO TDS for lower deduction certificate and nil deduction certificates. For example, if you have huge amounts like Swiggy or Ola, those people, those companies will go approach the AO for lower deduction certificates. So section 195(2) is from the deductor. 195(3) is from certificate. If you have that kind of, if the deductee, that is non-resident, possesses that certificate saying that this is the amount or this is the percentage of deduction has to be made as granted by the AO TDS by the in a certificate, the deductor is liable to deduct tax at source only on that specific rate or specific amount as given in the certificate. And that certificate is also for a certain specific period only. We will not be having, it is not a perpetual or it is not a specific transaction, it is for a specific period. Yes. As I told you, this both the understandings 195(2) and 195(3) are purely from the provision, pure reading of the provision, understanding. But the Supreme Court in Eli Lilly has held that these two provisions are optional. This happens like this. In case if the deductor or deductee is of the opinion that the gross assets is not chargeable to tax, only a specific proportionate amount is chargeable to tax, they can deduct tax at source. But it is at the option of the assessee. But at every time, the assessing officer will be having powers to examine this aspect. In case if the assessing officer is not convinced with the explanation, then he can pass an order under section 2011 for making a differential of TDS along with the interest. Therefore, in case if we are not struck at 195(2) or 3, as it said that it is an optional, at the time of scrutiny, we'll be struck and we have to explain them. So it is, even though it is an option, it is blessing in disguise. At the option of, it's at the discretion of the Supreme Court, it is optional, but at the same point of time, the assessing officer will not lose his power to examine the transaction. Yes. So as I told you, the certificate issued under section 195(3) as applied by non-resident deductee, it is valid for certain period as specified in certificate issued under section 195(3). They can specify for a financial year, not more than a financial year. They can specify for 6 months, 3 months, 1 month, at the depends on the facts of that situation of a transaction. And for all these transactions, everything has become electronic applications. Therefore, there is no requirement to file manual applications for these certificates. Yes, this is important where this one will be covered at the end of the session. Every payment to a non-resident has to be reported to the income tax department by way of filing form 15 CA and 15 CB. 15 CA is the form or a declaration by the deductor saying that this is the amount of payment for this specific service is being paid to this person residing in this country. This is form 15 CA. Form 15 CB is a certificate issued by a chartered accountant saying that this is the transaction between these parties and this is the amount being paid in foreign currency and Indian currency, and whether it is liable for TDS or not, if it is liable, under which head, under which provision, under which article of DTAA, and if it is not taxable in India, under which provision and which article, which section of DTAA, whatever it is. And then certifying saying that this is the TDS is not applicable in case there is no liability to deduct tax at source. So there are two things. It is not that every transaction attracts form 15 CB. Only specific transactions attracts form 15 CB. And with respect to form 15 CA, there are very minimum number of exceptions where form 15 CA is not required. For example, a personal transaction, a current account transaction reported by FEMA. So all these transactions, this will be discussed at the end of the session. So as I told you, section 195 is just an enabling provision that to deduct tax at source on the payments made to non-residents if the sum chargeable to tax. How do you arrive at a conclusion that the sum chargeable to tax? It is based on, one is income, second is residential status. Residential status is very clear that it is non-resident, therefore it is income, whether it is accrual or receivable. Section 5, we are very much familiar that whether it is a resident or a resident but not ordinary resident, resident and ordinary resident and non-resident, how it is covered. So when it comes to see whether for a non-resident, there are two things are covered. One is earned in India or deemed to accrue or arise in India. Second is received in India. Received in India is, there is no doubt about it. It can be very simple. But when it comes to deemed to accrue or arise in India, there are a lot of complications. To mitigate those complications, we have these provisions which shows that whether it is deemed to accrue or arise in India. Section 9 is not only for non-residents. We have to be very clear on this. Section 9 is not only for non-residents. It is for residents also. In which all the circumstances for a non-resident, the income accrues or arises in India is covered under this section. So basically, there are some relaxation exclusions for non-residents, as I told you. Here, they have section 9(1) has been divided into so many branches, there are subsections. One is whether it is an income through business connection, whether it is income in the nature of interest, salaries, royalties, fees for technical services. Therefore, each and every transaction can be differentiated or can be categorized under each head, so that we'll be having a more clarity, because this is also important for the purpose of rate of tax. For each and every head or nature of transaction, different tax rate may arise. In case if we say that it's not a fees for technical services, instead of categorizing under technical services, if we say it is a business connection, then the non-resident will be liable for tax at 40%, not 10% usually, which is chargeable for fees for technical services. Therefore, we have to be very, very clear under which head or what is the nature of the transaction. So section 9(1) starts with this, that main provision. Incomes deemed to accrue or originate whether directly or indirectly through or from any business connection in India. This is the first branch. This is the first one under section 9(1) clause 1. And property in India, in case any kind of income which is directly or indirectly through or from any property in India, whether it may be rent, whether it may be a lease, or whether it may be capital gains arising from sale of such property in India. That property may be jewelry, shares and securities, archaeological collections, sculpture work, anything which is covered under section, even capital asset definition under section 219 or section 56(2)(7). Any asset or source of income in India, transfer of capital assets situated in India. Coming to business connection, this is the first part, this one. Usually I'll call this business connection as residual provision, because usually every transaction I'll categorize whether it is a technical service, royalty, interest, dividends, all those things. In case if it does not fall under any of this one, I'll categorize this one as business connection. But for taxing it as a business connection, under business connection also, a lot of other conditions are there. We will discuss it over a period of time. Any business, what is business connection? Any business activity in India carried out by non-resident in India forms business connection. It is an inclusive definition. We have to keep it in mind. It is an inclusive definition. So the definition, the scope is very, very wide. In some definitions are just exhaustive definitions, maybe this means so and so, this means so and so, but here it includes, business connection includes. Therefore, it is an inclusive definition which the scope of this section is very, very wide. There are some exclusion of income for non-residents even under business connection also. If the non-resident purchases goods in India, if a non-resident coming from Canada purchases goods in India only for the purpose of export, that means he does not make any value addition to the product. He just makes export out of the purchased products. Those transactions are exclusion from this section 9(1). It cannot be considered under business connection. So by this one, you will get to know that even purchase of goods also are covered under section 195. Usually, at least till 31st March 20 or 31st March 19, we were under the impression that for goods are not covered under TDS. It is only direct under GST or VAT or under income tax. But here we have to be very clear that we have to understand that TDS is now applicable for goods also. Here also goods are covered. Next, non-resident news agency collecting news and information in India and telecasting outside India. For example, Discovery Channel or WION, World is One news channel. If they collect any news in India and if they publish anything outside India, not in India, so that whether if any income is earned out of it is not taxable in India. Shooting of cinematographic film in India, but it is displayed outside India. So this is very important through agents, because none of the non-residents will be concluding contracts or making business on their own here. It is very, very minimum. They conduct business through agents, non-resident agents. So when it comes to agents, there are two kinds of agents. One is agents specifically working only for that principal, that is non-resident, and second thing is for on his regular course of business as a principal. For example, I have been appointed as an agent by a non-resident in India. I am going to conclude the contracts on behalf of my non-resident. Even though he is the principal, I'll conclude all the contracts. I'll transfer the ownership or right to use, whatever it is. In that case, that non-resident is liable to be taxed in India, any income earned through the transaction. Suppose this is one kind of agent. Second is another agent who is on his own, where I am an agent of a non-resident, but I am not an agent of only that non-resident. It is in my regular course of business, I am an agent for n number of non-residents or many non-residents. For those transactions, that non-resident is not liable to tax in India. This is the differentiation given in the statute. That is, one is agent specifically appointed only by only for the non-resident transactions. Second is it is on his regular course of business. If it is a regular course of business, the business is conducted through agent, that amount is not taxable in India. But if it is through his agent, specific for only working for his purpose, those transactions are liable for tax in India. As I told you, agents, one is concluding contracts on on behalf of non-resident, and second is even though he's just maintaining stock of goods and delivers the goods on behalf of non-resident, even he is also covered, and securing orders for non-resident, only even though it is limited job, he is also covered. Next is which does not constitute business connection even though through agencies. As I told you, he's doing his work on agency on a regular course of business, not only for this specific agent. Yes, this is the new update. Explanation 2A defines significant economic presence. As everyone knows that now section 6, it is not for residential status. How do you arrive at the residential status? It is not about stay in India, it is about the significant economic presence. This has been defined in section 6. So even though we are not in India, even though the non-resident is not in India, he has no connection in India, still his presence is visible in India through this significant economic presence, because in this technological world. Facebook is not an Indian product, but still it has a significant economic presence in India. Instagram, WhatsApp. So all these applications, even though they do not have any kind of connection with India, they have significant economic presence in India. So to cover all these kind of transactions, significant economic presence have been defined, has been introduced as an explanation 2A to section 9.1. So we'll understand what is the significant economic presence means. Transactions of any goods, services or property carried out by a non-resident with any person in India, this is covered. This is normal transaction. Second, provision of download of any data or software in India, subject to transaction value of non-resident during the previous year exceeds rupees 2 crores. So what is this provision of download of any data or software in India? For example, you have subscribed Adobe software, PDF, which is not, which cannot, assuming that it is not an Indian entity, which has a significant, a non-resident. In case if you are paid any amount to them, and if you are able to download that software or data in India, you are liable for TDS. You are liable for TDS. It is not about, liable for TDS. It is covered under section under business connection. But still it can be exempted if Form 15C or Rule 37BB says, because it may not be having, it is maybe for your personal transaction or on current account transaction. But I just gave an example that in case if you download a software, if you download any data or information from these softwares, which has a significant economic presence in India, then it is liable as a business connection. Earlier it was not there, because when they do not have any connection with India, they cannot say that they have a business connection in India. But these kind of transactions are also have been included in significant economic presence, that is as a significant economic presence in provision section 9.1 explanation 2A. Second is systematic and continuous soliciting of business activities or engaging in interaction with such number of users as may be prescribed. This is an interesting topic. For example, Flipkart or Amazon. When it is a mobile application, that's all, it's a shopping app. If they are continuously, that is systematically and continuously soliciting of business activities or engaging in interaction with such number of users in India, it is considered as a business connection. It is considered as a business connection, even though they do not have any kind of presence in India. Now they have an office in India, Amazon, but if assuming they don't have any office in India, through this definition, they are covered under business connection because they have a significant economic presence. Yes. As I told you, even though that non-resident has no residence or place of business in India, in case Amazon does not have any place in India, still it can be covered under significant economic presence. Services, I'm just giving an example, that's all. Services are not rendered in India. As I told you, nowadays there is no requirement to render services coming to that specific place. We have virtual facility where we can render services from any end, from anywhere. Therefore, the significant economic presence need not be happening only with services rendered in India. It can be services rendered without not in India also. Yes. You may say, just because they have a significant economic presence and they have a transaction in India, it is how it can be considered as business connection or how it is liable for tax in India. For that one, they have specific explanation for this where it says that whatever the income attributable to those operations in India, only that much of transactions is liable for tax in India. We would be hearing this kind of phraseology in business profits when we categorize the payment to non-residents under business profits. We'll see whether they have a permanent establishment in India. If they don't have any permanent establishment in India, we'll say there is no liability to deduct tax at source. But if they have a permanent establishment in India, again two things we'll verify. One is whether permanent establishment has rendered any services or not. If they have rendered services, to what extent? Only income attributable to the operations in India with respect to permanent establishment amount is taxable. Otherwise, it is not taxable. So the same concept has been introduced here. The income attributable to the transactions or activities in India alone are taxable, not the entire income of that non-resident. Coming to salaries, it is very clear. In case if a non-resident has come here or has earned salaries from India by rendering services in India, he is liable for his income is accrued and arisen in India. There is a specific provision for section salaries paid by government. For example, we have lot of brand ambassadors for between countries where they will be working under central government but in different country. For example, Indian ambassador in US where their services are rendered for India but being stayed in US. For them, it is still accrue or arisen in India because as per this provision. Even though they earn, for example, any center, I just give an example as ambassador, but you can imagine any other person who is rendering services for India, being staying outside India and being paid salaries paid by the central government are liable for tax under this provision. Yes. Coming to dividends. Income deemed to accrue or arise in India if the dividend is paid by an Indian company outside India. If a non-resident is a shareholder, for example, I am a non-resident, I am a resident of US, I am not a resident of India. I have invested in an Indian company and because I have invested in Indian company in a share capital, I am getting dividend. My dividend income is liable to be taxed in India. Non-resident Indian company paid outside India, still I am liable under this provision. Yes, this is a very interesting topic, royalty, but I will not eat your heads much about this one. This is completely about transfer, granting license, imparting of intangibles. I have not used each and every expression used in the explanation to section 916, which says art, work film, design, formula, secret formula, copyright, so and so, etc. This is of intangibles. Any patent, any copyright, these kind of things which are covered under this one and which have been transferred, granting license to use those softwares and imparting of those softwares, that is information, those are covered under this royalty. I always said, what is royalty? Royalty is very simple. I'll just give an example to explain this. Best example for this one is author and publisher. If I have written a book, I am the author of the book. I have complete rights on that book. But to reach out to people, to maybe specific or vast kind of community with respect to this book, I should have a publisher. So I will enter into an agreement with the publisher who will take the copyright of this book. He will publish these books, he will sell it. He will pay me royalty based on any kind of agreement, maybe number of books sold or for a period or whatever it is. So here, I am the author, he is the publisher, he is taking the copyright to use the book for the purpose of selling. Here, we should be very, very careful how to use this expression, copyright. When the royalty is being paid by publisher to author, he is liable for tax because he is using his copyright. The book will be registered as a copyright in the hands of or in by the author in the name of author, and that author is liable. Any payment made to author is liable for tax in India. But when it comes to a purchaser, for example, I am a book reader. I am going to a shop and purchasing the book. I will not be deducting tax at source on the payment made. You may say it is because you have purchased the goods. Forget about goods. I am purchasing a copyrighted article. I am not purchasing the copyright. What is the difference between copyright and copyrighted article is copyright where you will be having certain rights to use a specific book, maybe whatever as per the agreed terms, the publisher will be having rights. So therefore he is paying the amount to him as a copyright, fees for copyright. But here I am paying for a copyrighted article. I will not be having any right over the book. I cannot use that book as in anywhere. In case if I am using, then it is use of copyright, it will be violation and it will be a royalty. But here I have no right on that one. So when you are for any kind of transaction, let it be any kind of transaction, any kind of intangible, you can use this example: book, publisher and end reader. Author, publisher and end reader. Author gives the right to use that book, is transfer the use to copyright to publisher, and publisher sells the book to the end reader which is a copyrighted article. Therefore there is no liability to deduct tax at source. When it comes to fees for technical services, managerial, technical and consultancy, these are the main terms which has been used in the provision and in so many articles under double taxation avoidance agreements. There are two things, very simple. With respect to Income Tax Act, if you want to categorize managerial, technical and consultancy, based on some certain kind of nature of services, you will categorize whether it is managerial or technical or consultancy. But in case if some certain kind of services are not able to be categorized under managerial, technical, consultancy, there is one decision or so many decisions, which is a settled proposition, which says that if there is any human intervention in the services provided, any human intervention in the services provided, it has to be considered under managerial, technical and consultancy services. I repeat, if your nature of services are not being able to categorize under managerial, technical, consultancy, then you have to see whether any human intervention is involved in the providing the services. If it is covered in providing services under human intervention, then it is liable for tax in India under fees for technical services. Yes. Double taxation avoidance agreements. It is very clear that what is double taxation avoidance agreement, where these are the agreements entered into between governments of two countries, where either income has to be taxed in only one country and another country will give the credit for it. In case if either income will be taxed in one country, or if it is taxed in two countries, they will give a benefit for tax credit in one country. So the basic criteria, the basic feature of this DTAA is DTAA prevails over Income Tax Act only for the purpose of beneficial rates. I have mistakenly beneficial interest, beneficial rates. So if DTAA provides 5% of rate of tax, and if Income Tax Act provides 10% of rate of tax, then whichever is the beneficial to the assessee can be taken up. So this is very clear from the provisions of the Act itself. So DTAA, I want to cover only two things here. One is fees for technical services. We have a lot of agreements, DTAA agreements, treaties where they use for fees for technical services make available knowledge. What is make available knowledge? We have read in 917 with respect to technical services, where that fees for technical services is only managerial, technical, consultancy. But for example, if you go for DTA between India and USA, they use the expression called make available knowledge. Make available knowledge is very simple. In case if a service is rendered by a service provider and has been received by a service recipient, and in future if service recipient is able to conduct that kind of similar service on his own, that is, he has learned that one, he has acquired that knowledge, and in future he is able to do independently, that is the make available knowledge. If that condition is satisfied, make available knowledge, it can be considered as a technical service. Example, I am a non-resident, I am giving a service of teaching how to teach to one resident. In future, it is a maybe it's a certification course or whatever it is. In future, this service, he need not depend on me. He has acquired that knowledge of teaching and he will be rendering that teaching service to so many people. In that case, amount paid by that resident to me for this kind of service amounts to make available knowledge. So he should be independent in subsequent transaction that he can render services on his own. Then it can be covered under make available knowledge, and it can be considered as fees for technical services under specific DTAA like US, UK, Singapore, these DTAAs. Second is residual provision, as I told you, business connection. So similar to this one, we have business profits in DTAA. For if the specific transaction is not covered under any of the section, that is fees for technical services or royalty or dividends interest, it will straight away come and sit under business profits. And until and unless they have a permanent establishment in India, they cannot be taxed. In case if I'm a resident selling goods or purchasing goods from a non-resident, but that non-resident does not have any permanent establishment in India, that amount is not liable for tax. He has to pay taxes only in his residence country and not in India. So final thing is Form 15C and Form 15CB. As I told you, every transaction is being reported, has to be reported in these forms, which it is a form of intimating the income tax department that this transaction is being happening. So there are two things, one is 15CA and 15CB. As explained to you, Form 15CA is a declaration by the deductor. Form 15CB is a certificate from the chartered accountant. This is covered under Rule 37BB. There are 4 parts in 15CA. For each kind of transaction, each nature of transaction, these 4 parts are applicable for different nature of transactions. First nature of transaction is irrespective any of amount, irrespective of payment of rupees 5 lakhs, irrespective whether it is taxable or not. Form 15CA Part A has to be filled, only Part A. For example, I am making payment of 7 lakh rupees to a non-resident, and that amount is liable to be filled under Part A. Whether it is taxable or not taxable, that is a different point of thing. Second, Part B. In case, irrespective of any amount, 1 lakh, 2 lakh, 1 crore, if there is a 195.2 or 195.3 certificate as specified, as I told you that AO has to give a certificate for proportionate deduction. So if these two things are involved, then Part B will come into picture. Part C, if Form 15CB is being issued, then Part C will come into picture. Part D, if the amount is not chargeable to tax, as I told you, for example, it is coming under business profits, not chargeable to tax because they do not have any permanent establishment in India, then Part D has to be filled. So Form 15CA has to be filled. There are 4 parts. For each kind of transaction, some nature of transactions, these are covered. So in case if you are filling up wrong parts, then it may cause more trouble to the assessee, because that based on your which part of the form, they will be picking up the case for scrutiny. So it will be very, very hard if you have chosen a wrong part of the form. When it comes to Form 15CB, even though it is applicable for remittance made to any place outside India, it is not applicable in all cases. As I told you, only Part 15CA, Part C. As per Rule 37BB, following are the exemptions. One is, in case the payment is less than rupees 5 lakhs, in case certificates at section 195.2 and 195.3 are obtained, and in case the payment are not chargeable to tax. So Form 15CBA can be exempted for these things. Only Form 15CA is sufficient. Yes, exemptions for Form 15C. As I told you earlier, there are some exemptions for intimating the department. There is no exemptions from filing Form 15CA. One is it has to be made by an individual. That is, payment has to be made by an individual, not a company or a firm. Second, it should not be chargeable to tax under the provisions of the Act. I'm just giving an example. I am a son residing in India. I am making a payment or remittance to my father who is in USA as a gift, just transferring the amount. And third, does not require the approval of RBI. There is some specific provisions or transactions listed under Rule 37BB where these transactions are not covered. As I told you, one specific transaction is gift. Gift by a relative to another, gift by a relative or to a non-resident. So in these cases, there is no requirement to file Form 15CA. But what happens is nowadays, the banks will insist for Form 15CA irrespective whether it is chargeable to tax or not. So to satisfy those people, we are issuing certificates. Otherwise, there is no requirement to issue Form 15CA for some certain transactions which are covered under RBI regulations. And even so, as I told you, some current account transactions also, FEMA has listed those transactions are not liable for reporting in Form 15CA. So 15CA also has some exemptions for filing, which has to be gone through very in depth. So with this one, I am completing my session because I want to give a brief idea about this non-resident taxation on payments to non-resident, that is on TDS. Therefore, if any questions is there, you can ask. Sir.
The branch. I'm directly buying the goods from the parent entity and making payments to the parent entity. Will that be considered as a business connection?
No, that is the reason I told you, attributable to the operations in India. Therefore, the branch does not have any operations. That is one. Second, when it comes to DTAA, as I told you, it's a residual provision. In case this purchase of goods is falling under business profits, they don't have any permanent establishment in India. Even though if branch is considered as a permanent establishment, they don't have any role in this transaction. Not liable for tax in India.
There is Supreme Court case law in March which says that if you a subscription of software for end user, there is no TDS applicability. So after that, there are a lot of confusion regarding the equalization levy, and everybody is instructing that okay, if TDS is not applicable, you do equalization levy. What do you stand? What is your stand?
I just want to discuss right now on equalization levy because of the lack of time this one. But TDS is very simple. The basic concept, as I told you, author, publisher, and this one, the same thing is applicable for the software also. I'll just give you an example like this. Tally software, what we use on day-to-day basis. The Tally will sometimes be directly selling the product to the end user, or it will be through some authorized dealers also. Usually we used to buy in CDs. Right now, nowadays we don't have those CDs, but we used to buy in CDs. So we used to go to some computers, systems shops and used to buy. So that authorized dealer was purchasing some copyright or even copyrighted article, and he used to sell that one. Whether I am liable to TDS? No, because I'm subscribing for the software for limited usage of that software. I do not have any right on the copyright. Copyright is nothing but it is a formula where I cannot disturb that entire any product. Therefore, it is just for end user. For subscription, TDS is not applicable. In case if the copyright has been transferred or the right to use that copyright, the software is being transferred, then that payment is liable for TDS, not for the end user, because I'm purchasing only a copyrighted article. I don't have any right on the product as such. That's all. Equalization levy, I'll just Exactly. And in Karnataka High Court, Samsung and Synopsys, they were holding this one. But recently, decision of Supreme Court in engineering analysis has clarified this picture. Yes. Sir, you can take it up. Sir.
Thank you, Sandeep. Now, friends, have come to the some amendments. I think we have only another 15 minutes time to discuss. Correct, 7:15 we have to close. Okay. Here is I want to take some which are possible to discuss. That 194A. Friends, this 194A is there from the statute book of 1967. As per the 194A, if you are paying interest to any depositor or any other thing you borrowed from them, you have to deduct tax at source. There is an exemption, so many things is there, everything. But especially the cooperative banks and cooperative societies, or a cooperative bank, especially from income tax, from the assessment of 2007-8 onwards, a liable for income tax. Then the problem started, whether to deduct taxes source, what other things, so many issues, but I'll come to the final conclusion. In 2015, with effect from 1st June 2015, earlier cooperative banks, there is an exemption under 194A, subclass 3, subclass 5. It says that when you pay interest to members, a cooperative society paying interest to its members, they not say who is a member. Member means, member as understood in the Cooperative Society Act, you pay interest to members, any amount is exempt from TDS. Is exempt from TDS. That is the provision. Then cooperative bank saying that I am a cooperative society first, but I am doing banking business, therefore it's called as a cooperative bank. Otherwise I am a cooperative society. This 194A subclass 3, subclass 5 exemption is available to me. I am not required to deduct tax source. There is a stand we are advised, and also you are told a lot of cooperative banks took a stand, and we proved that we are a cooperative society. In the Bengaluru tribunal it is held in favor of that, saying that cooperative bank is a cooperative society. The exemption provided under this 194A subclass 3, subclass 5 is applicable to cooperative bank. This is a stand. Then after that, there is a Finance Act 2015. The Honorable Finance Minister, Mr. Arun Jaitley, late Arun Jaitley, has amended this provision in which he says that this exemption is available to cooperative society other than cooperative bank. It means that any member of a cooperative bank, if he keeps the deposit and is getting more than the threshold limit of 40,000 or 50,000, then you have to deduct taxes from 1st June 2015. This is the background. There is a circular issued on 27th November 2015 by the finance minister from the CBDT. They clarify why they want to introduce all these things. They clarified after the Finance Act is assent given by the president. By the time we had a lot of confusion, they are very clear from 1st June 2015, cooperative bank paying interest to members, you have to deduct tax source under 194A. That is a law is very clear. But in case of cooperative society, exemption continues. Therefore, there is no amendment to cooperative society paying interest to members. This was the provision. Then subsequently, the finance minister, our honorable finance minister, thought it that what is this? I am giving exemption to cooperative society. Why I have to make some alteration or I make some amendment saying that in cooperative society also to deduct tax source. She said that okay, I am amending a provision 194A. This is not applicable to a cooperative society whose turnover is more than 50 crores. given exemption for small cooperative society, big cooperative society, you deduct tax resource. There is no logic, but they said you deduct tax resource more than, turnover is more than 50 crores. This is effective from 1st April 2020. Then they said, okay, cooperative society whose turnover for the year ending 31st March 2020 is less than 50 crores, no worry, continue the exemption. And more than 50 crores, we deduct TDS from 1st April for all the members. That is the provision. This is amendment is only relates to cooperative society. Cooperative banks already deducting tax resource from 1st June 2015. There is no confusion at all. But our friends in the cooperative sector, they started interpreting in a different way, whatever they convenient to them. Law is very clear. When a cooperative society paying interest to members where its turnover is more than 50 lakhs, they have to deduct tax source from 1st April 2020. That is the law. Now what happened? Earlier law is very clear. On 27 November 2015, the law is very clear. When a cooperative bank paying interest to another member, you have to deduct tax source. When a cooperative bank paying interest to another cooperative society, no TDS. Kindly be noted. Cooperative bank paying interest to another cooperative society, no TDS. This is very clear. When a cooperative bank paying interest to another cooperative bank, no TDS, because under 194A subclass 3, subclass 3, in that it is an exemption is there where both deductor and deductee covered by the Banking Regulation Act, no TDS. Now the friends, now they are interpreting saying that cooperative bank is a cooperative society. My turnover is more than 50 crores. Therefore, the TDS provisions are applicable. This exemption is not available. Therefore, I have to deduct tax source. A cooperative bank already deducting tax source. It is there from 1st June. But only cooperative society whose turnover is more than 50 crores has liable to deduct tax source under this. This is the provision. Now, there are various way of interpretation. This is what my personal view is very clear. Cooperative bank not necessary to deduct tax source when they are paying interest to other cooperative societies. Other cooperative society, whether a housing cooperative society or any other credit cooperative society, when you are paying interest, the exemption given, explained in the para 4.7 or something of the circular, dated 27 November, holds good today. It is not withdrawn, it is holds good today. I think my friend want to add something to that. What is a problem you are facing?
In fact, though it is applicable from 1st of April 2020, they have started it from this year, this financial year, that is 2021-20.
Is a mistake.
Yeah.
If they are the view that you should deduct, you have to deduct on 1st April 2020.
Yes.
The law is very clear. But my view is, when a cooperative bank, including District Central Cooperative Bank, including Apex Cooperative Bank, when they are paying interest to other cooperative society registered under the Societies Act, whether Karnataka Societies or Multi-State Societies Act, whatever the amount you pay, the exemption continues. Not required to deduct tax at source.
Adding to that, they are asking the societies to apply for lesser rate of TDS. They are asking to file the Form 13 also.
Correct. They may tell so many things, but as per law, whether it's required or not. So, my view is not required.
Mine also is same, sir. But they are not ready to take the risk.
What is the risk is there? When a law is very clear, what risk is there? Then the income tax is full risk only. All 763 sections, risky sections. What to do? You have to live in this. But risky is not this one. But I am clear, if it is applicable, please apply. Not applicable, don't apply. But if you have any doubt, then you take in favor of deducting taxes. There is no doubt at all. It is your interpretation wrong.
They are applying your golden principle. They are applying your golden principle.
Golden principle. No. What I'm telling is, in my view, TDS is not required to deduct a tax source. Why they deduct? It is not required. It is after that you cautiously you follow my golden principles, fine. First you agree whether required to deduct or not required to deduct. If it is not required to deduct, no question of this one.
The law is very clear, sir. It is specifically mentioned cooperative.
See, what happened, sir? The chart accountant, I do not blame chart accountant or a tax consultant. A youngster who has started to practice, I can say that excuse because you are a youngster. But what happened is a person who want to interpret this, you have to read what was the old provision, what happened in 2015, what happened subsequently, what is the circular issued, and what is the now this amendment. Amendment is very clear. It is for a cooperative society whose turnover is more than 50 crores. But cooperative bank already covered. It is not required to cover under that. They say, sir, cooperative bank is a cooperative society. My turnover is more than 50 crores. Therefore, I have to deduct tax time. Already is there from 1st June 2015. Where is the question of adding? Therefore, this is my limited view on this. I feel it is not correct. Say that it is not, exemption is not available to the cooperative bank. The 194J is an amendment in Finance Act 2020. There is earlier was 194J where technical service or a professional service rate was 10%. Now there only change in the rate. Technical service is 2% and professional service is 10%. There is the only change in the rate. There is not much change. 194O is the payment for certain sums of e-commerce operator. When you are making e-commerce payment, then you have to deduct TDS at the rate of 1%. It's like a purchase 194Q. This is also e-operator. The section is very clear. You are liable to deduct under 194O. You have to deduct under 194. Not you cannot say 194Q. They say. But if the operation participant is a individual HF up to 5 lakhs, no TDS. If it is more than 5 lakhs, TDS is attracted. I told you on 14th May 2020, the finance minister has announced some COVID packages. In that, she said that 13th May, there is a notification. In that, they say that all the TDS provisions, please deduct TDS 75% of the what is the rate prescribed under the particular provision. If the rate is 10%, deduct at 7.5. This is only from 14th May 2020 to 31st March 2021. It is only limited period they issue a notification. But they amended the section, they introduced a new section called 197B. It is effective from this period, 14th May 2020 to 31st March, to ratify the notification through an Act 197B. In that, all the sections they cover. In that, they say that all the sections wherever this one, you have to deduct TDS at 70% of the normal rate. That's all. It is over just for your information. I want to share with you. 2061H, which I already discussed when I am discussing 194Q. This is from 1st October 2020. Seller, when he collects amount more than 50 lakhs and his turnover is more than 10 crores, then he is required to collect tax at source at the 0.1% of the realization. It is only based on the realization. 1st October 2020. This is, say, sales you have made maybe in the earlier period, but amount realized after 1st October 2020, you should collect TCS at the rate of 0.1%. This is the provision. I told you earlier, if it is a TCS and 194 TDS on purchase and 194 is applicable, please apply 194 code. Law is very clear. 194 code, not TCS. Because of overlapping, be careful when you are advising. IB, this is the special provision. You know, under 194I, rent paid is more than 2.4 lakhs. Then you have to deduct TDS. But this 194IB, it says with the new provision, rent exceeding rupees 50,000 per month. It is applicable to individual HF, no turnover limit at all. In 194I, when you are deducting rent under that provision, the amount should be more than 2.4 lakhs. And it is applicable only to the person, individual HF, if provided his turnover is more than the tax height limit, whatever he will limit. Now they say that this is no limit at all. 194IB, if we are paying rent more than 50,000 per month, you are required to deduct tax of source at the rate of 5%. It is applicable to everybody, whether you are a business assessee or a non-business assessee, salaried employee or anybody. 5% TDS under 194 IB is attracted and you are paying rent more than 50,000. But you are not required to deduct TDS and every month. You have to deduct at the year end. For April to March, by 31st March, you have to, whatever the rent paid, if it is more than 50,000, totally, on that 5% you remit on the last month of the year. Or if a tenancy is closes before the month end, then you have to tenancy ending period, you have to deduct 5% of the total rent paid, subject to condition that rent paid per month is more than 50,000. This is applicable to everybody, salaried person, non-salary, business, or any business. Anyhow, if it is a business connected transaction, you deduct on 194I. This is for other people who are getting. This is the provision for rent payment is more than 50,000. This is a 194I. See, herein you say where the specified transaction, specified agreement. Usually when you enter into joint development agreement, when you are entering a joint development agreement with the owner, a developer, they'll say that, okay, I'll construct a huge residential complex. I'll give you 30% of the construction area to developer, 70% to the owner. That is the type of arrangement, or what are the ratio, 60-40. Plus, they'll give a non-refundable deposit. Kindly note, non-refundable deposit, maybe 1 crore. Now this 120YC after 1st April 2017, when you are paying a non-refundable deposit or a non-refundable security deposit, whatever you pay, that you have to deduct TDS at the rate of 10% on that deposit, non-refundable. If it is a refundable, no TDS. If it is a non-refundable, you have to deduct under 194HC. Earlier, no section was covered. They want to avoid such transaction. They introduced from 1st April 2017. 194M, this is also applicable to a individuals or HUF who is doing any contract for any under 194C or 194, any payment covered under this section. Usually if he is not having a turnover more than the tax audit limit, then he is exempted. Take for example, I construct a asset for my personal use, it is outside the 194C. But this section says 194M, it says that if we are doing anything and total payment to one person is more than 50 lakhs in a year, then you have to deduct tax source. We are not overlooked because usually individual means you will say that no TDS. But this section says that if it is more than 50 lakhs in a year to one person, even though you are individual HUF or is maybe a personal transaction, still you have to deduct tax source. This is the requirement. Please be careful. No, you understand this, you want is a refundable subject to fulfilling condition. Is not refundable if you have not fulfilled the conditions. I think this is the issue.
It is refundable in all the agreement, even though it is not refundable.
No, in the agreement you say refundable, then is definitely not no TDS. This section is not applicable. Only when you cancel or when you say decided to not refund or refund, whatever, then that time taxing or TDS violations it will attract. But your agreement is very clear, you are not going to refund. Then it is attracted. If you are going to say refund subject to any conditions is there, then you can say that this 194IC is not applicable. Is not applicable, you can take it. 194N friends already I covered regarding TDS on cash withdrawals. Already I told you earlier was up in 2020 is only limited from September 2009 to June 2020, 2% on the cash withdrawal more than 1 crore. Now is presently is very clear from 1st July 2020 is if it is a withdrawal is a non-filer of returns or he has not filed the return for any latest 3 years, then 2% is the TDS from more than 20 lakhs. Threshold limit is 20 lakhs to 1 crore, more than 1 crore, 5%. This you have to keep it in mind what is the rate. you have to adopt. If he is filing regular return, 2% more than 1 crore. Threshold limit also changes and also rate also difference. Friends, I listed roughly around, there is a circulars, 5 circulars I have listed here, which are useful connected to section 194O, 194Q, 296H. You have any issues connected to this section, please refer the circulars, which says very clearly, this circular is refers to 206AB and 296A, where twice the rate, how we have to adopt all this thing. Then circular number 20 is regarding the application of 194N. In that they have clarified very clearly, if he is a drawer of the account holder is a situated in a APMC yard, this 194N is not applicable. He is the person account holder is a agent of a APMC yard and is having a license in APMC yard, he is not required to deduct TDS under 194 and is exempted. From 2020, that continues even today also. This is the regarding the 194O, what are the conditions you have to fulfill, how to deduct that I explained. Next is 19 July 2017, there is a clarification by the immediately after GST was come into play. Very clearly they say that GST should not be included as purpose of TDS. We have a bill in which bill value plus add GST, what are the rate, 10% or 12% or 18%, you added, your TDS is only on the basic value, not on the GST component. Suppose it is an auditor fee, 1 lakh rupees and the GST is 18,000, 1,18,000 is the bill amount. Your TDS should be on only 1 lakh, not on 1,18,000. This is one situation where the auditor has not given the bill like this. Inclusive of GST, my fees is 1,20,000. Then you have to deduct TDS on 1,20,000. Clear? In the invoice, there is a GST component is mentioned separately, no TDS on GST. If it is not mentioned, for whatever may be reasons, if it is not mentioned, my bill is inclusive of GST, then you have to deduct on the gross amount, full amount. This is the 23/2017 circular, and this circular, other circular is about 194Q. Friends, I want to conclude with the other 2 slides. Under chapter 17B, there are 43 sections. One section is 195, another 42 sections is related to domestic transaction. Non-resident related is only section 195. But you have an obligation, statutory obligation under the Income Tax Act, chapter 17B. You have to deduct in accordance with the sections, according with the rules, and remit to the government. Deduct one obligation. Next is remit to the government. Remittance is on or before next month 7th. Only March is 30th April. Like that, the given due date. You have to remit before the date. Next is file the returns. That is a quarterly return, 24Q and 26Q. Correct date. If you are not filed, then there will be 200 rupees per day is the fine. Automatic fees, 234 E, F or whatever the fees that section is applicable. Then issue certificate. After filing quarterly return, you have to issue certificate 16A, that certificate you have to issue within the times prescribed. Friends, if you have not done this obligation under chapter 17B, consequences are interest under 2011A for non-deduction is 1%. Deducted, not remitted to the government is 1.5%. You have 2 things. One is 1% or 1.5%. Not deducted, okay, this man is not deducted, no problem, 1%. But deducted, not remitted, government money is retained, then 1.5%. Disallowance under 40A1A, friends, you are all aware what is the disallowance. He is under 40A1A, first was 100%. When a section 40A1A was introduced, was 100% of the expense was disallowed. But now is at least 30% of the expenditure is disallowed. TCS, no disallowance. Because sales they will not disallow. Sales is no disallowance, only the expenses are disallowed. Okay? Penalty 271H. He says for any mistake in your uploading return, error, mistake or whatever that, you have to pay 1 lakh rupees is the, and 10,000 to 1 lakh is the penalty. Finally, prosecution 276B, it says that you are deducted, not remitted to the government for a long time, more than 12 months, then the penalty, prosecution under 270 is minimum 3 months, maximum is 7 years. Maximum is 7 years is the prosecution. Otherwise, you don't want a prosecution, then you can go for compounding fee at 3% first time, second time 5%, 2 times in a lifetime you can go for compounding of fees. Finally, friends, I want to thank all of you for the present here, and also thanks the viewers in the virtual program who are sitting and listening to our program. I think we made it very clear to all of you that tax deducted source under Chapter 7B and under Section 195, a clear that where it is. This is only brief of these sections. Friends, I have not discussed all the critical issues. So many issues is there. You can discuss for hours, you can discuss for days. But my friend, when he approached me that you have to, then I thought this, I want to be first person because he is from my place. It is my privilege that I should come and address the members. There is a, based on that, he has given me an opportunity. Thank you, Mr. Srinivas, for giving this opportunity. Thank all the office bearers and thank all of you and all the viewers for watching my program. Thank you very much. Thank you, Sandeep. Thank you. Sir, yeah. Yeah, please tell me. I'm ready.
Now pertaining to section 194Q, suppose the assessee turnover is 10 crore in preceding previous year and the assessee has paid BESCOM towards electricity charges in which it exceeds 50 lakhs during the current year. In such circumstances also, does assessee required to deduct TDS?
Sir, circle is very clear. Electricity, any energy renewables thing is not attracted in 194. Here is the electricity charges, which is already given exemption circular. Read the circular, I will tell you which is the circular. I will give the reference circular. Circular 13/2021. I mentioned 194O, actually the 194Q. There is a clarified in para 4.1. It says that any electricity charges paid, it is not covered by 194Q. Sir.
Thank you, sir. Last question is whether Form 15A has to be furnished for transfer of amount from them, the account of the transferor to his own account in UK.
Okay, that is it.
For you.
Sandeep, you tell.
Yeah, this is for Sandeep. Whether Form 15A has to be furnished for transfer of amount from them, the account of transferor to his own account in UK.
No, there is no requirement to issue form 15CA or 15CB in case if the assessee or if the deductor or if the payment being made to his own account, transferring this amount to his own account, there is no requirement to give form 15CA. But as I told you, bank will insist. Banks are insisting. Yes, but there is no requirement of this. Correct, but nowadays 15CB they are restricting, saying that there is no requirement of 15CB, but 15CA for every transaction they are asking. Yes, practically 15CA has to be issued, but there is no requirement as per the law.
Take for example, what we already that was not. So here, and really important. In the mark, bank has to remit the taxes. But now they have to do only the actual payment or whichever is. They have to say, in your case, you have encash. What is the interest you are paying, bank is paying, and then let them get it. But not on the accrual. But all the 3 quarters they have deducted on the accrual. Therefore, sir, now you are getting something now in the quarter 3. Yeah. When you are encashing, they will get it. Yes. On that, just the old thing, what actual interest you are getting now? Suppose interest provided every month 25,000, 3 quarters 75. In the 4th quarter, after reducing all the premature close interest, suppose you are getting how much? On that 10%. The adjustment has to be made the last one.
Thank you, everyone. Thank you for the wonderful session, sir. I would request a big round of applause. Yes. Before I call upon chairman to propose a vote of thanks, I would request chairman to hand over memento to D R Venkatesh, sir. Thank you, sir. I would request Mr. Manjunath M. Halod to come on the dais to hand over a memento to us other speakers, Mr. Sandeep. Thank you, sir. Now I request our chairman to propose vote of thanks.
Thank you, Venkatesh sir. Yesterday I called Venkatesh sir, I said there is no much physical presence, majority are virtual. Immediately he said, ಯಾರು ಇರ್ಲಿ ಬಿಡ್ಲಿ ರೀ ನಾನು ಮೀಟ್ ಮಾಡಕ್ ಬರ್ತೀನಿ ನಿಮ್ಗೆ ಬಿಕಾಸ್ ಯು ಆರ್ ಫ್ರಮ್ ಅವರ್ ಏರಿಯಾ ಅಂಡ್ ಐ ವಾಂಟ್ ಮೀಟ್ ಚೇರ್ಮನ್ ಫಸ್ಟ್ ಟೈಮ್ ಆಫ್ಟರ್ ಟೇಕ್ ಓವರ್ ಐ ವಿಲ್ ಕಮ್. ಯು ಸೆಡ್ ರಿಯಲಿ ಥ್ಯಾಂಕ್ ಯು ಸರ್. ಇಟ್ಸ್ ಐ ಫೀಲ್ ಇಟ್ಸ್ ಎ ಬ್ಲೆಸ್ಸಿಂಗ್ and even if it is a very senior member and addressing large gatherings, even lesser member also he agreed to come and addressing our members. Thanks a lot, sir. Once again, I thank on behalf of Bangalore branch of ICA for excellent session. I also thank all the members present physically and virtually on behalf of Bangalore branch of ICA. Thank you all. Good night.